Good morning, students. Welcome to another class, virtual class on audit. Today we will spend the initial 5-10 minutes on case studies relating to the Code of Ethics, and I'll also would like to take some questions if you have, and then we will move on to the new chapter, a spatial audit in an automated environment. All right. So I've got some case studies for you. I would request the participants to answer the questions. So to start with, ABC and Associates is a partnership firm and is a joint auditor of a bank. There are 4 other joint auditors along with the ABC and Associates. ABC failed to disclose a material misstatement relating to one of the advance accounts under his purview, which he was reviewing, auditing. He didn't follow the RBI prudential norms for conducting the audit. So this is basically, there are 2-3 things. Keep this in mind. As I told you the earlier days also, you need to really dissect the case study and see what are the, there could be more than one components in a case study. So here 2-3 things have happened. He is a joint auditor. There are 4 other auditors with him, and he failed to report a material misstatement. Materiality, remember, materiality is the key, one of the important keys here. So he failed to report a material misstatement relating to an advances which was under his review, and what he did, why he couldn't identify such error in the advance account, because he didn't follow the RBI prudential norms, ICAI guidelines, which tells us how to do the audit. Now, the question is, will all the 5 joint auditors will be guilty of misconduct, or only ABC will be guilty? So please answer this. And as I told you, read the question more than once. See, first decide whether he is guilty or not. If he is not guilty, then also you have to give an answer. Why do you think he is not a guilty? You can't just write one line that he is not guilty. Won't get marks for that, right? So Ranjit, yes. Good morning and welcome. You say clause 6, part 1, second schedule. Yes. Anything else? Anything else? Yes, you are right. Clause 6 talks about the clause 6. What else? He is guilty of misconduct under clause 6. What else? Is that all? Clause 6, because he could not identify a material misstatement which was there. So is that all? Anything else you would like to say? We can also add something else, right? I think we can. If you read the question more than once, you will get at least one you can identify. Please do that, students. You will get a big question from Code of Ethics. So please tell me, what could be the other clause under which he will be guilty of misconduct? I'm sure you will be able to identify at least one more. Yes, please. Some volunteer. Ranjit, you started. Why don't you find out if anything else is there? Any other clause? No other clause? What about the significant departure? Which clause talks about significant departure from the standards? Whatever standard it may be, auditing standards or whatever. Yes, he is not guilty. Somebody, Srinivasa Reddy, says no, ABC will be guilty of misconduct because he has not followed. Yes. So which is this clause? You are right, Srinivasa. He is guilty, but you have to tell the clause. This is for your, okay, let me tell you, this is under clause 9. Clause 9, part 1, second schedule. Yes, that he didn't follow the RBI prudential norms, which means a departure from the auditing standards, or, the guidelines. I wouldn't say auditing standards, but a guidelines. RBI prudential norms tell us what are the guidelines, what we are supposed to follow and remember when we do our audit. So that was not done by the ABC and Associates, auditors of ABC and Associates, and hence he could not find out the material misstatement. So at least these two clauses are applicable here, clause 6 and clause 9 of part 1, second schedule. Can't you also say it is a gross negligence? Why he didn't do it? You see, you have to think a little bit. Why there was a departure. The departure from the generally followed practices, because he was negligent. So we can always also probably write that, he can also be held guilty of misconduct under clause 7, which talks about gross negligence on an auditor's part. Alright, so we can, if you clarify properly, it will be good. But straightforward, for this case study, the auditor is guilty of misconduct under clause 6 and 9 of part 1, second schedule. Very good. And we can also think of the gross negligence part also. Very good, students. Hope this is clear. Okay, let's go to the second one. Mr. Y, a CA in practice, prepared a 5-year plan for revenue. Alright, a 5-year revenue plan for a client based on certain assumptions and conditions. Okay, based on certain conditions and assumptions. Due to the pandemic, the projections didn't materialize and the client blames Mr. Y for the miscalculations. Can Mr. Y be guilty of misconduct? Please explain. Rahul, good morning. Guilty under clause 6, 7, 9. Excellent. Very good. Good going. So please tell me, for this study, is Mr. Y can be held guilty of misconduct? Because his assumptions, because his plan didn't forecast, his forecast or projections didn't work out for a client due to pandemic. Will he be held guilty for any misconduct? The client is saying that yes, because of your miscalculations, I'm off the mark, and the revenue has not, we have not been able to achieve the revenue that you projected. Will he be held guilty? I think these are quite straightforward. So will he be held guilty? He won't be held guilty. Under which clause? Clause 3, part 1, second schedule. The simple reason is that it lies in the question most of the time. Why most? In almost all times you will find that the answer lies in the question. It has to be. It all depends on how a participant is actually reading and understanding. So understanding for you to, read it properly and then understand the case study is very, very key. The words, I have written it here that it is based on certain assumptions and conditions, right? He has not vouched. He has not said it is absolutely 100%. It is not an historical, value. We do audit on historical data. This is not historical data. We are forecasting. Mr. Y has made a forecast for the next 5 years. This is going to be the plan subject to these conditions. Subject to that economy is good. Maybe, the growth rate is as per whatever when he was making the assumptions that the client tells what you have is so and so, at least so and so when he made these assumptions. So he had made a lot of assumptions and conditions. If any of them or couple of such assumptions and conditions are not working, naturally the forecast will not materialize. It will not materialize. And for that you cannot be held in guilty for misconduct. Okay? Because he has not given a 100% guarantee that it will actually work in 100% way. So he has not given such guarantee. He has not given such kind of an forecast that it will 100% materialize. So he has not vouched for it. So hence it has to be construed that he is not guilty of misconduct under clause 3, part 1 and second schedule. Please keep this in mind. Pratibha says, if the work is divided, that only that particular auditor is guilty. Pratibha, in this case, the question is very clear. Is he guilty? So he's not. You had just given that the other auditors are not guilty, but you're not saying whether the auditor is guilty. The auditor who was doing that particular audit, who failed to identify and report such misstatement, whether he was guilty. So I assume you are saying that he is only guilty, not the other auditors. Yes, other auditors will not be guilty for the work conducted by the other auditor. But please remember, all the joint auditors, all the auditors are, they are responsible. They are responsible for the audit they do. They are jointly and severally. They are responsible and accountable for the work which is not allocated, which is done by everybody, which is not specifically allocated. To that extent, everybody will be responsible. But for this particular case, none of the other joint auditors except the auditor who was doing the audit, he will be held guilty. Yes, ABC will be held guilty. Okay. And Satrudhan, you are saying, yes, not guilty. Clause 3. Very good. Subramaniam Cheniappan, you can't see us. We are already there. We are there live from 7 o'clock. Can you see us, please? Please, we are live. And 1 minute to respond the case study before discussion. Yes. So, Trudhan, you are right. Good. Mr. Subramaniam, please confirm if you can hear us, you can see us. Okay? We are there for the last 10 minutes already. We went live from 7 o'clock sharp. Alright, so Mr. Y will not be guilty here, as most of you have identified. Very good. Yes. Next one. Mr. Z, partner of XYZ and Associates, expired. The other partners decided to share profits with the widow of Mr. Z. The provision for such exists. Actually, I wanted to write no such provision. Sorry. Mr. Z, partner of XYZ and Associates, expired. The other partners decided to share profits with the widow of Mr. Z, though provision for such doesn't exist in the partnership agreement. Is it a misconduct? Yes, Rahul, I remember what you said. This was your query. I will answer this. What is the difference between clause 12 of part 1 of first schedule, clause 1 of part 1 of first schedule, and clause 2 of part 1 second schedule? I will clarify this before we move to the second, the other chapter. I'll do that. I remember this. I didn't write it, but I will tell you. I wanted to tell you this. So please tell me whether this is a misconduct. Can they do it? Can they do that? This is not probably it is not related with the second schedule. So basically he is, they cannot do it if it is not there in the agreement. A firm cannot pay a percentage of the profit or the share of the fees unless it is, they're sharing it with a partner of the firm, or they can do it with the widow of the deceased or legal heir of a deceased partner, provided it is there in the partnership deed. But for this case study purpose, it is not there in the partnership deed, and they cannot do it unless the deed is modified. Alright, so without modification of the partnership deed, they cannot pay a share of the profit to the widow of the deceased partner, Mr. Z, and hence it will be a misconduct under clause 2, part 1, first schedule. Please remember that. Misconduct, they cannot do it. Yes. Yes, ma'am. Yes, ma'am. Very good. Clause 2, Ranjit says, clause 2, part 1, yes. Those who are saying yes, it is a misconduct, I assume that you are not writing in detail because you have to write so much. So I assume that you also know the clause. Okay, so please, I'm sure you will not write it the way we are writing it here. All right, that's acceptable in the class, but please mention in detail, that why do you think it is not a misconduct. And those who have come, who are joining again, a new face, I see Vijay Kumar Naik from Nepal, you have joined. Welcome to the class. Those who are joining new, please remember that you must write the clause in detail, explain the clause properly, that what the clause talks about, and then try to, map it with a case study. You have to map it with a case study, that in context to the case study, how that clause is applicable. Then only it is possible to get 100 out of 100 in this particular question. There is no reason why you can't get 100 out of 100 for this, question, because there is no room for much, error here. It's either yes or no. So first, that is the main point that you have to identify. If you identify, please write in detail. If you could identify it properly, I'm sure you know why. A person is guilty or not guilty. Explain in detail, please. You need to write in detail so that you get 100 out of 100. And 16 marks is not a joke. Just imagine 100 from 100. If you get out of 100, you straight away get here 15, 14, at least 14 or 15. It's no joke. It gives you a, immediate headway in the entire chapter, in the audit, chapter. So all the chapters taken together for the audit paper. So please remember. Okay. The last one, a CA firm gives a qualified report which was submitted to the MCA. Okay, however, on insistence that bank will reduce the cash credit facilities if a qualified report is submitted, the firm removes the qualification for submission to bank. Is the firm guilty of misconduct? Give the conclusion with explanations with reference to the clause, part and schedule. Yes, please. Can he do that? Can he do that? He changed. He has submitted, he has given a report which has already gone to the authority MCA. And now the client has to get they came back and said that if we submit this report to the bank, they are going to reduce, or they'll review our cash credit facilities. So we can't give a qualified audit report to the bank. So please change it and give us a clean report which the firm agreed. So will they be held guilty of misconduct? I think this is straightforward a case of guilty of misconduct under the clause 7 of part 1 and second schedule. Okay, please keep this in mind, just to refresh your mind that under the clause under the part 2 there are several regulations, acts and details are there. Yes, the firm cannot give different reports. Yes, Srinivas, you are right. So please remember that anything which you can identify with a clause, the regulation, various regulations of the institute, guidelines of the institute Chartered Accountants Act, and they will fall under if those regulations, if such case study is not particularly falling under a particular clause that we have discussed in part 1, first schedule or second schedule, it always comes for the act, regulations and the guidelines. They always will come under the part 2. Okay, please remember clause 2, part 2, second schedule. So keep that in mind. There are tips and ways of remembering which we discussed at length during our last 3 classes, how to remember. So you must follow the way to remember. Once you remember, I'm sure tackling a case study will be easy for you. It will not be difficult. Okay, and yes, this one I will take. Rahul's one I will take. Yes, so you are talking about. Yes, somebody said, so Trudhan, you said that yes, explain if the partnership agreement provided the profit sharing, then the conclusion is that yes, they can share the share of profit with the legal heir of the deceased. They can. Okay. What is the difference between clause 12 part 1 first schedule? What is, let's go back to that. Let's go back. I will just quickly. Okay, so what is the clause 12? Clause 12 talks about the who can sign a report, right? Who can sign a report? Who's going to sign a report? So who all can sign the report? Can anybody else other than a partner attest a report? Just a minute. So clause 12, speak out the, I will tell you the exact language. That's why I went back to the language. The clause 12, part 1, first schedule says, allows a person not, if it will be guilty of misconduct, if someone allows a person not being a member of the institute in practice or a member not being his partner to sign on his behalf or on behalf of the firm, any balance sheet, profit and loss account, report and financial statements, anything, please remember for our purpose, any audit report, whether it is a report or a certificate. I explained in detail the difference between a certificate and an audit report. Any report or certificate which is not signed by a partner of the firm, okay, it will be the firm or the partner will be guilty of the misconduct under clause 12 part 1 first schedule. So it has to be essentially signed by the firm, the partner of a firm, having a, of course, he will have a certificate of practice. So the partner cannot ask on his behalf paid assistance who is a chartered accountant and who is also having a certificate of practice to attest it on his behalf. No, that's not allowed. Please remember, I'm again reiterating that a firm can have paid assistants who are chartered accountants and they are having certificate of practice. That is not a problem. They will be termed as, they are deemed CA in practice, but they are basically there for the purpose. Maximum thing what they can do, they can be used for taking the articles under their name. All right, and of course they can do the work. But what they cannot do, they cannot sign a final report or a certificate on behalf of the firm unless and until they are also partners in the firm. Please keep that in mind. Very, very thin line difference. But they can also sign some draft reports. They can sign some queries and send, which is being sent to the client, that I want this information. Could you please give us such information? That they can do. They can send invoices and things like that, but they cannot sign a report or a certificate. That's what. Okay, that's it. The next one you said what you want. So I hope this is okay with you. Clause 12, part 1, first schedule. Then you say clause 1, part 1, first schedule. In his name. It cannot be, the firm has to be in the name of the partner, or, say a proprietorship firm. You cannot have, the name is important. What name you should give? Can you use a name which is already there in the, in our community? No, you cannot. The firm name has to be approved by the institute. So they look into it. Can we use the name which is already being used by some other firm? We cannot do that. So clause 1 talks about, I'll again read out the exact wordings. So keep in mind the name. So there is should not have confusion. If you remember the way I told you, highlighting those, words. Okay, very quickly. I'll read out exact the words. Clause 1 says allows any person to practice in his name as a chartered accountant unless a person is also a chartered accountant in practice and in partnership or in employment. Okay, now I got it where the confusion is coming. 12 is talking about signature, all right, and 1 is talking about the name, that whether I will lend my name for a partnership or I will if I am also a partner there. A partnership name, say I'll give you an example for clause 1, XYZ and associates. Is it mandatory that, Mr. X will also be there, Mr. Y will also be there, Mr. Z will also be there? May not be. When they started, probably, all such partners with the initial of the partner's name was there, XYZ. But over a period of time, they retired, somebody is, maybe expired, but they continue to have other partners, or even XYZ are there. They have more ABC. But doesn't mean that we will have again change the firm name, XYZ ABC. No, XYZ remains, because when it started, they had got it approved from the institute, and it is, I'm not giving it to somebody else to use it. I'm their partner there. You can only give it to them, somebody, when you sell your right? That my goodwill is sold. Now I wind up my existence from the firm. I sell it to somebody who will continue in my name, the firm's name. They will not change the firm name if it is still available. If it is available, if you remember this in detail, that firm name is kept in abeyance for a year. So please remember that I have decided to sell the firm, and if I notify to the institute, the name will remain in abeyance for 1 year, so that somebody else cannot take same name and start practicing. So within this year, if we settle and sell it off, I get my proceeds back and whatever the agreement is, and that other person who's actually purchasing my firm, he will continue to practice in the name of the original firm. So you cannot allow somebody else in your name to practice unless and until you are there, and unless he is a chartered accountant, such person is also a chartered accountant in practice and is partnership with you. He is a partnership with you or employed with you. All right. So that's the difference. And then you said about which clause? Another clause you said. And clause 2 of part 1 of second schedule. Clause 2 and part 1 of second schedule talks of what? Very quickly, I'll read out. Just a minute. Okay. Clause 2, if he certifies or submits in his name or in the name of the firm a report of an report which he didn't examine. I think you got confused because of this name, signature and all. Okay. Without an examination, please, Rahul, you go through the word which I highlighted. So, clause 1, part 1, first schedule talks about that the name, how I can lend my name and do the practice, okay? And clause 2 of part 1, second schedule, talks about whether I can sign a report without examination. If I do that, I'll be, the practicing CA will be guilty of misconduct. And 12 straight away talks about who can sign a report. Who can sign a report? The difference between clause 12, part 1, first schedule, and clause 2, part 1, second schedule is that in the first one, in clause 12, you are not signing yourself. You are getting it signed by somebody else who is not a partner. And in clause 2 of the second schedule, part 1, you are signing without examination. Without examination. So let me give you a case study. Probably I'm just speaking out a case study impromptu. Say Mr. X, he is a a practicing chartered accountant in XYZ and Associates. He did a certificate, but because he was not there to sign a certificate, he asked his staff, who is also a member of the firm, to sign the certificate on his behalf. But he also is aware that staff, who's a member of who's also a chartered accountant, he didn't examine it. Neither Mr. X examined the papers underlying the certificate. So is he be guilty of misconduct here? Yes, he will be guilty of misconduct under two clauses. One is that clause 12, part 1, first schedule, that he signed it. He didn't sign it, but he gave it to non-practicing CA to sign on his behalf. That's a misconduct. And second misconduct will be clause 2, part 1, second schedule, that without any examination he signed it. So there are two clauses under which he will be guilty of misconduct. So you read it this way, all right? So that should be easy. So there is shouldn't be any confusion. This is very you have to read it in the way you should be. I mean, so please highlight on the nomenclature, the name, the words which I highlighted. You read it multiple times, till you get it. From now onwards to your exam, which will be held in November. So you please, probably every day, it takes 5 minutes. It only takes 5 minutes, my dear students, to go through the clauses. Only make a list, bullet points, highlighting the words. It will immediately, you will remember. And after that, if you are reading the clauses in detail, I think it will take only 1 or 2 good reading to remember. Trust me, it is not difficult. Okay, if you keep on thinking that it's very difficult, we are not understanding, then it really becomes difficult. You have to be, very cleverly studying it. Okay. Yes, Ranjit says certificates report without examination. Very good. Clause 1, absolutely. Sign, signature. Yes, you are all right. Okay. So if that is all, I think we have answered most of the questions, all of the questions. And if you have more questions on Code of Ethics, you please post it. I will answer it by sending, filling up the Excel sheet and giving it to the Board of Studies. They will share with you. You can post questions, not a problem at all. Okay. So that will be all for Code of Ethics. Now we will move on to the next chapter. That's chapter 4. Spatial aspects of auditing in an automated environment. Okay. So this is the chapter 4 in your audit curriculum. So what is it? So we will be looking into, now we all know you're a final year student, so you know what kind of, how the audit is done, what are the guidelines to be followed, rules, regulation, acts, everything you are aware of. Thank you, Rahul. It was my pleasure. So it was, so you are aware how to do an audit, but how to do an audit in an automated environment. What do you mean by automated environment? Simple thing. We are into complete automation today, digitization. All the systems we do not have any, manual records these days. Probably those were the times when we were studying, we had manual records. Computerization was slowly, very slowly was coming. Now everything is computerized. You don't, other than probably writing the examination, you don't use pen and paper or taking down some notes when you are going to the client. Everything you do in computer, isn't it? So that's an automation. Your working papers, your verification sheet, everything, all working papers are automated. So ideally should be automated so that they can be stored properly for several years. Okay, so there are very many benefits. So we need to know certain aspects, what we need to focus as an auditor when we are auditing a client who is completely automated. They do not have any kind of a manual record keeping system in place anymore. So we will quickly go through them, these aspects today. So please keep on posting questions if you have. So the key features of an automated environment, these you are aware of. We will quickly go through this. That, we know that there are several package software are available. Tally is one of the most understandable example that we can take. We know Tally, everyone know. You use it for your own, firm's work also, that we have to keep books on records. That's also a requirement of Code of Ethics. So we use Tally for that also. Maybe QuickBooks. Okay, whole lot of things. So these are called package software. Package software is meaning that you go and buy a software and start using it. You don't have to do anything. It is simple. You bring that software, put it in your machine, and make some master entries, and you are good to go to start the work. That's a package software. Okay. Now, everybody cannot work on a package software, because you can well understand, if it's such a simple software, all the functionalities of the clients or the organizations may not be fulfilled. So, there are other software like ERP for small business. What is an ERP? ERP is Enterprise Resource Planning. It isn't, for your exam purpose, just remember this, it is an integrated software. It is an integrated software. What is the meaning of integrated software? You put in you make one entry in a system, or you put in one record in a system, not necessarily accounting entry. You put in one record in the system, which will automatically flow from one place to another, and will create the automatic accounting entries for you. Alright, like say for example, I can give you an example. When you are receiving goods, the materials, goods against a purchase order, the goods are received at a warehouse, say, or a store. So what would they do? The storekeepers, will they make an accounting entry? They are not accountants. They are not finance department. They are the stores. They are the storekeepers. Okay, they are the warehouse guys. So they are part of the logistics. So what they do? They will receive the material, and they will put in key in that information that against this purchase order, so and so material is come, and we receive it. They are in good condition and all, and we receive it. So they make a good receipt entry, GRN. They make a good receipt note. Alright. The moment a goods receipt note is recorded in the system, automatically, in a good ERP system, automatically, without any manual intervention, system will create a accounting entry which is done when a goods receipt note is created. Stock is debited, and a liability is created. That liability could be anything. It could be, the creditor's liability. It could be other liability. If the invoice is not there, we'll not go into it. But a double accounting system accounting record will be created with a debit to the stock and credit to some liability. So when a software has this capability, that such software are actually ERP. So you are putting in a record in store, you see the accounting entry has been made in the accounting for the accounts department, for the finance department. So they may be geographically very different in a different place, but doesn't matter. System is taking care of it. Alright, system is taking care of it. There are so many benefits which you are already aware of. So no manual intervention, no delay, nothing. Alright, so immediately it happens. These are real time. So you are using the word real time. So you see, this is real time. It's not like, earlier days when goods receipt note is done in one place, then they say, when they put in and they accumulate the goods receipt note, and they send it to the finance department in batches for making entry at the end of the month or periodically. No, those days are gone. So batch entries do not happen very often today, unless and until they are specific for specific reasons and things like that. But these are automatically happening and without any manual intervention. Okay, real time. And then we have a ERP for medium and large enterprises. ERP for medium and large enterprises, like SAP. Some examples: SAP ERP, Oracle Financials, Microsoft Dynamics. So there could be many such examples. They take care. What's the difference between the small business and the large enterprises? Naturally, their business is big, their complexities are more, and naturally they need more sophisticated software. And ERPs are available: SAP, Oracle, Microsoft. These are the widely used software. Okay. So for your exam purpose, what are the components of an automated environment? You need to know. Why you need to know this? You please remember, my dear students, you don't have to remember for the technical part of it. No. You are going to be a chartered accountant. Your focus will remain that only, either in audit or in service. You don't have to know very detail of the technicalities. That will be done by the engineers, IT engineers, computer science engineers and all. But we need to know how we do the audit, or when you are in service, how we are going to work in an automated environment. What are the various components which we must keep in mind because of the risk and the threat. Unless and until you do not know what threat is there, what risk is there, you cannot have the controls. From the auditor's point of view, that's the most important thing, that the controls are working. Today we are into risk-based audit. Gone are those days where we would go and start vouching. Substantive testing, substantive audit is done very less today. You don't have the time, and why one should do? Because system is there, controls are there. Why should you go for 100% vouching? No, you won't do that. You do that only for limited cases, like say I gave you example other day, the bank. Even there we cannot do a sample and anything like that. There we have to see 100%. But other than that, they say, for example, when you want to see the revenue figure, amount, revenue figure, or the expenditure figure in your profit and loss account, and then in the sundry creditors and debtors in the balance sheet, the underlying, will you be able to, is it possible to check 100% all the transaction that has happened during the year? It's not possible, and it's not required also. It is not required also to check. Okay, so what we focus on is the risk base. Wherever there is a risk, we need to see whether controls are adequate to thwart that risk and something wrong has not happened. As long as you can prove that with documentation, you are good to go. All right, there is no problem. So we have to keep that in mind. Hence, we have to not only know about the software, the application, we need to know what can go wrong if the other things on the top of which the software is sitting, if they go wrong. For example, if the server is not working. If the server is not working, what is the point of having an application software? System will not work. Can you say a simple example? We are doing so much of online transaction today during this pandemic. You are purchasing online. Can you purchase online if you many times it is said that you are unable to reach the destination. That means you cannot reach this what comes, unable to reach the destination. There could be two things. One is that there is a network problem, or it is possible that the server is not responding. No problem with the software actually. There is no problem with the software. There are problems with those infrastructure which are required to run the software. Network is important today in an online real-time situation where a cloud system you are looking into, and other hardware, the operating software. Hardware is running, operating software is not working. Power is not there. There could be so many reasons. There could be hundreds of reasons. So that's the reason, as an auditor, we need to know in which of these components what fall. For your exam purpose, please remember, so we have a physical and physical environment, physical and environmental infrastructure. Physical infrastructure means you have hardware, you have the various hardware like server, network equipments and things like that. What are the environmental? The servers need certain environment. You cannot keep a server in a hot, atmosphere. It needs to be cooled down continuously. It has certain specifications. When you go to the ATM, many times you will see some good ATMs, they are, continuously on a changeover basis, the ACs are running. In several ATMs, you will find that the ACs are permanently out of order. But still you will say, the server, the ATM machine is working. Yes, today it is working. Maybe down the line, 7 days later you go there, it is not working. You cannot test it, let's see how long an ATM can work without an AC. We don't have to do that. We need to give an environmental condition for these systems to run continuously. The importance of these things, that they should be continuously available to the beneficiaries, right? Whatever it is. It could be an ATM too. Those who have done the bank audit, you will know. We have to also comment that in a bank, specifically for the central auditor, I will discuss this next day, probably, that, how many ATMs are down? A big bank, a public sector bank having, say, 10,000 ATMs across the country. It is important, it is very much important as per the guidelines and the compliance requirement, that to see how many ATMs are actually functional on a particular day wise, they review it. What are the problems if they are not working? Because if I need a money, I will definitely go to my, bank's ATM. If the ATM is not working, the requirement for money will remain. So I will go to some other ATM, which is not my bank's ATM. What will happen? I will get money from there. This bank will charge a fee to the bank where I am having an account. So you see additional cost is getting incurred. So that's an auditor's that we are checking. We are not checking whether the why ATM is not working technically. No. But what is the fallout because the ATM didn't work? Additional expenses were incurred, which could have been avoided if some, precautions were taken. Some precautions were taken. So that's the important part of it. Please, you have to keep that in mind. So physical and environmental conditions under which system ideally run. The network equipments, various network equipments like say local area network, wide area network, VPN, virtual private network using internet. So whether they are working. So we are when we are working, can you do anything? If the wide area network is not working, if the VPN is not working, because why you cannot do anything? Because I do not own the VPN. I do not own it. It is owned by some third parties, like say, it could be BSNL, Reliance, Airtel, whoever. They are the service providers. So service providers have to have certain, we have to, why we go to a better service provider? We know their systems are better because they are monitoring. Their guidelines are good. They follow, they continuously monitor. That's the reason the system is up and running. That's why they become reliable. Why one is not less reliable than the other? Because of these reasons. They are monitoring. Not because they are using better equipment. Everybody is using same type of equipment. The simple reason, old equipment do not work. Old equipment, they do not work because you cannot keep on using that equipment which is, can you use a Microsoft, any software which is no more supported by Microsoft? We can't do that. We have to use the latest technology. So everybody is using latest technology to the extent possible, most of them, but monitoring, how the things are kept conditioned under proper environmental and physical conditions, how they are kept and maintained, those are important factors. Okay, and hence one becomes more reliable than the other. And then comes the application, which is one of the examples given here is the SAP R3 application. And it's a huge software. So one has to be very, very careful. You don't have to know. You may ask me question that after we become a chartered accountant, do you have to know SAP, application? No, you don't have to. You don't have to do that. But you need to know what are the basic functionalities which is available in the public domain. Okay, if you go to SAP's website, you will get to see what are the various, modules they offer and what are the various functionalities under each of the module. That would be good enough. That would be good enough for you to understand what it offers, and then vis-a-vis check what your client is doing, and then make a plan for the audit, which you will learn, which is part of our auditing standard again. And what is an unique, this is operating system. A machine cannot start, simple thing, a machine cannot start without an operating system. A physical machine must have at least one operating system. What is Oracle 12G? It is an example of the database. Only an SAP application is not enough. It is an application, the graphical user interface through which you put in your information, you put in your data, that I want to withdraw so much of money, right? I want to put in a purchase order. Like say when you go to Amazon, let me give you an example to clarify the difference between an application and the database. Okay. So suppose you want to buy something from Amazon. What you get to see how you connect with the Amazon through internet, that's what VPN is all about, right? Through VPN, you are connecting to the Amazon, and then what you get to see certain screen. You search certain things which you want to buy. That's the application. That's the front end. Okay, that's the front end. One of the example could be, SAP is one of the examples. It could be any other software. All right. So that's the graphical user interface that is giving you, and it is searching for you. It is working based on your queries. Now you found out the item that you want to purchase. So you select that and you put in the quantity and you say, we purchase. You check out. You make the payment depending upon how you want to make the payment and you check out. Now what happens after that? A confirmation comes. You get a confirmation. Please think, my dear students, what happens after that? That means that data goes and it gets deposited in somewhere, and that somewhere is the database. So your data which you put in, that I want to purchase so and so, I make the payment through my credit card or a debit card, all these information, they are stored in the database and they are worked upon. Your work is done. Now it is the work of the Amazon to arrange for the delivery till that is delivered and a confirmation is sent back to the, Amazon that yes, the material has been delivered, dispatched, delivered, and we have got the proof of delivery. Then the entire transaction cycle is closed. So these, and it changes from one step to another and the database gets updated. So please remember, database is a storage where our data gets stored. It is a storage location where your data gets stored. All right. And as a user, you don't get to see the database. You are working with a database through the application, through the graphical user interface. Keep in mind, you have no access to the database. And why I'm saying this thing, because when you're in your audit, if you go and see that somebody has access to the database directly, that's a huge risk. That's a huge risk. We need to point it out in our audit report somewhere or other. We have to point it out. It is a loss of internal control. Maybe the management doesn't know. In my career, I have seen so many such examples where the management is not aware of. IT is doing this. All right. And so it is our responsibility to also inform the stakeholder. Management is one of the key stakeholders that these things are happening. So and so people have direct access to the database. Now you can ask me, what is the problem if they have a direct access to the database? They can unauthorizedly modify the data. Example, you want to buy one product which you do from your front end. Now, I know somebody who has access to the database. I tell him, could you just change it to 10? But the money is not getting changed. I paid for one, and if any person fraudulently can go and change the quantity, just put one more zero to the quantity, just imagine what will happen. It is absolutely possible, unless and until adequate controls are built into the entire transaction cycle. It is possible that 10 quantities will be delivered at the price of one quantity. Isn't it a fraud? It is a fraud. So that's the reason why if an auditor gets to see that there are chances, possibility that people can, some users in the client has access to the IT, it is important to inform the management, because if we fail to do so, we are falling under the misconduct of Code of Ethics. You remember in part 1 of our schedule that somebody committed a fraud, the employee committed a fraud. All right. So it is falling under the Code of Conduct also for schedule. So remember that. So we cannot, so whatever we have to be guided, we have to be guided by the Code of Ethics, because if we fail to identify such things, we will be falling under the, we will be held guilty for misconduct also. So keep this in mind. These are the various components in an audit environment. Okay. So software. So what are the software? So when I'm talking of the software, I'm talking of this part, say SAP R3 part. We are talking about that. Okay. That's the application. IT components, what are the various software? So you see software and hardware. Basically it is the software and the hardware. I'm sorry. So you see in a real time, what is a real time and a batch non-real time? Real time is, you're putting in a transaction, the result or the impact is felt immediately. I gave you the example that some goods have been received. The moment a goods receipt note is recorded in the system, one can get to see the accounting entry also. That's a real time. Or another example, very practical example, is that when you're withdrawing money from your bank account, you immediately, even before the cash is dispensed from the machine, you get a message. You get a message that this much has been withdrawn and your balance stands so. Isn't it a real time? Just imagine the power of information technology today, that you are withdrawing money from an ATM and from your location, and the server could be in some other city, thousands of miles away from your place where from you're withdrawing the money, and before the cash, you have the cash in your hand, you get a message that your account has been debited with so and so. So these are real time. Please keep it in mind, and these are possible because of the database network. So do you understand you have to understand the risk involved, and we have to plan the audit accordingly. Network is involvement, how the information went. You put in your PIN, the PIN cannot go in plain text and also that's a risk. Alright, and we have to have adequate controls. This you will learn as you go later on also, but for your exam, we will restrict ourselves to this. So that's a real time. So there is an application. What are the things that is there? So application example are this. We have a middleware. A middleware is which stands between. For your exam purpose, please remember, middleware is a software and a hardware also, which is there between the server and the user. The server which is holding the database. Okay, server is actually holding the data in the database. So middleware is in between the actual user, the application user, and the database which is lying somewhere else. This is the middleware is between, I am withdrawing money from the ATM and it is actually being reflected. The data is getting modified in the database which is again 1,000 miles away from the ATM. So middleware is taking care of it and network is taking care of it. So some examples of middleware is web server, ATMs and things like that. Okay. And ATM switches does whole lot of things, not in purview of our discussion today, but these are all part of the middleware. And network, of course, without a network we can't operate at all. And hardware, yes, that's the server, that's the data server, the backup, the storage, power supply. These are all part of the actual hardware. Okay. For our audit purpose, audit cycle, we need to remember this. This we will keep on. You will see this in the entire audit paper that we do. It's, as I told you, it is all about today risk-based audit approach. So risk assessment is very good, important. An auditor will do audit effectively and efficiently more, than another auditor who is equally capable, knowledgeable and skillful, that we can identify and do the risk assessment well. If we do the risk assessment well, our planning for conducting the audit will be far, far better. So initially we need to spend more time on the risk assessment. Okay. So identify the significant accounts and disclosures. Please keep in mind for your exam purpose, we will be talking about the balance sheet, profit and loss account only. We are not talking about anything else. We are not talking of SAP R3. We are not doing a review of SAP R3. We are talking about signing the annual financial reports. That means the balance sheet, profit and loss account and other related annexures and notes. Okay. These figures which you are attesting, which a chartered accountant in practice is attesting, that is generated from an automated system. So it is, we need to know how that automated system are working. If the automated system is not working correctly, if there is scope of, making a fraud there, the entire thing will fall flat. I'll give you another example here. In a service industry, 60% of the cost will be the human resource cost. Payroll. All right, the payroll. Now, so our focus, materiality is the focus. You remember we had been talking, you will be talking about more in auditing standard. How do you find out the materiality? So here we know that the significant account balances. So for a service industry's balance sheet, payroll balance, the salary balance is a significant account balance. The The moment we have that, how do you plan to do the audit of that significant balance? We need to plan, right? We are planning here. You see, we start with the planning and then we execute. How do we plan? We know that this is a significant balance. Then you start going through it, that how the salary balance is accumulated. There are 10 offices, how attendance is recorded. Attendance is recorded from the attendance recording system probably. All right. Just give me 1 minute. I'll have a glass of water. So there may be 10 offices where attendance recording system is there. Various type of attendance recording system could be there. Somebody is automated. Somewhere it may be still manually done. Okay. Somewhere maybe biometrics. Somewhere it could be based on cards. Okay. You touching the card. Somewhere it could be biometrics. So many things. We have to check that also, that how good that system is. Because salary to a great extent is dependent on attendance. So if the attendance system is wrong, it is not free of errors. How can you ensure that the account balance is correct? We need to think this way, So this is what we do at the time of risk assessment, that we identify the material account balances and disclosure, and qualitatively and quantitatively we check that. It is not only by value. It is not only by value. We have to see the qualitative part of it also, not only the quantitative part of it. Okay. So those kind of things. It could be one quantity. The quantity could be only one. But it is important to have it. So a whole lot of things are involved. We'll not go into such detail here. And you will see in the auditing standards. Relevant financial assertions. That what financial assertions means? That cutoff, valuation, these sort of things. These are some of the assertions that we need to comply with as an auditor. We have to satisfy ourselves before we sign a report, whether with qualifications or give a clean report. So audit assertions are important. Whether, cutoff is correct. Whether all the transactions pertaining to 31st March has gone into the system or something is pending. How do we ensure that? So we need to identify that. We have to plan it accordingly. Okay. Cutoff, valuation. How valuation is done? Is it arbitrarily done? Is it, I know a client, very recently we do internal audit there. We identified it and they agreed that it was incorrect, that the finished goods were valued at a standard cost. It cannot be done. You can book it at standard cost, but at the end, at the reporting, on a reporting date, and I am talking of a listed company where they have to convert into an actual cost. All right. So it was done through SAP. So they said that, there are some problems in this, and we are going to correct it. Of course, they have to, otherwise they were non-compliant, and the reporting was accordingly done. It was emphasized, in the report. We highlighted it in our internal audit report, and the statutory report highlighted it, and they gave it as an emphasis that there is a problem, and we converted. Because why they didn't qualify? Because it was converted manually. It was converted manually. They said that it is a issue which needs to be looked into from the internal controls point of view, that the system is not actually calculating the finished goods at actual cost, but it is still carrying it at the standard cost even at the year end, and this is done manually. The moment you are doing it manually, there is a scope of error, and we have to do it for each and every product, which is a huge task, and there is the risk of error remains. Okay, so we need to plan it, and that's the reason we need to review the system a little bit. We need to understand it. Identify the likely source of misstatement. The example I gave, that if I was not aware that the finished goods is still being carried at the year end at the standard cost, it would be materially misstated. You are non-compliant with the regulation, so it is not at all acceptable, whatever the value may be. That's what I'm saying. Value is not only important, quality is important, because it is being mentioned by the law. The law says that you have to evaluate, at a actual cost. So how can I still value it at a standard cost. So whatever the cost of the material may be, irrespective of the fact, we will remain non-compliant. So that's important, that materiality as well as qualitative and quantitative, and consider the risk arising from the use of the IT. Okay, people are leaving. People are leaving the organization. Systems are old. Machines are very old. Network is not upgraded. Hardware is not upgraded. The operating systems are not upgraded. The databases are not upgraded. These you need to know, because this has implication and material impact, and it can go up to the going concern level. I'll give you a small example of how can unupdated software, old software which is not maintained by the manufacturer, can go up to a level of non-going concern, and you are not mentioning that in your CAATs report. You just imagine how guilty of misconduct we will be. Say a particular database is being used, okay, and say Oracle is being used, and the version, here we have mentioned about the version 12G. They are still using Oracle 9, okay. Oracle 9 has been disowned by Oracle several years back now. It is no more, it is out of service. It is out of circulation, but many organizations are still there. They are still running. They are still running with that. They will say it is still running. Okay, what is the problem? As long as it is running, there is no problem. But the day it stops running, then it will be such a problem that you cannot start working. What will happen to that? This, as an auditor, it is our responsibility to train, to make the auditee aware that the day it stops, and you never know when that day will come, you will not get support from Oracle. They will say this is out of circulation. We do not give you any support. We do not give you any support. You will remember, I'll give you an example again. You will remember in last year or last to last year, there was an attack. There were some attacks. Okay, in cyber attack was there, and Microsoft came out voluntarily with patches which are for very old machines, because they knew, they have it in their database, that who are still using very old systems for which they do not give support anymore. But as a good gesture, because as a good gesture, Microsoft came out with new patches to counter that cyber threat, the cyber attack, and release patches even for those old systems. And they requested the users of such old systems that you update the patch, you will be safe from such cyber attack. Okay, ransomware was there. These ransomware were there, and if a ransomware comes, you just cannot use your machine. A message will come, you please so and so dollar in Bitcoins, then only we will release your machine. These, as an auditor, you need to be aware of it, and so that you can make the auditee aware of it. Okay, so that's the risk assessment part of it, that how IT systems can give rise to risk. Based on that, you understand and you document it, and you make an evaluation. Document. So I keep on harping, and other faculties will keep on harping on that. Documentation is so important for your exam purpose. Then will come for practice and service. Document understanding of the business processes using flowcharts and narrations. You have learned how to do a flowchart. It is very simple. Once somebody starts, and I think in ISCA flowchart used to come. I don't know if in audit flowchart comes, but it will be good if you get a scope to explain something in a flowchart. There is no harm in doing so. So flowcharting is very important in documentation. It is very easier. It's very easy to do it. I have some screen here, and then we prepare an narratives also, which we call risk control matrix. That what is a risk, and what control you have. So unless and until an auditor in practice, a member in practice, he identifies the risk versus control, the audit plan can never be done. Audit plan can never be done, and execution will be faulty. And we always will run the risk of being guilty of a misconduct. Whatever, whether we fail to inform some material misstatement or whatever. Okay? So we must prepare some risk control matrix, understand design of controls by performing walkthrough of end-to-end, if possible. It may not be possible in all situations, but it will be useful. Okay, process-wide considerations for entity level control segregation of duty. What is the segregation of duty? And another assertion, auditor segregation of duty, right? What is that segregation? That one transaction cannot be completed by one individual person. What do you mean by one transaction? Transaction is a cycle. Please remember, transaction has a cycle. Say purchase. I'll give you a simple example. Purchase. You intend to purchase something. So purchase, so it starts with a, say let's start to simplify this, we'll start with a purchase. When does it get completed? It gets completed when you make the payment. So P2P, procurement to pay. Okay, so this is the entire cycle of the transaction of just one purchase you think of. So doesn't it go through this entire process of procurement to pay? It does. And all these, there could be various processes in this cycle. Somebody is making, somebody is initiating the procurement, the purchase. Sorry, in organizations, somebody will approve the purchase order. When the purchase order is approved, it goes to the vendor. Vendor will send, it will go to the warehouse or into the store. Somebody else will make a GRN. All right. Then the bill will come. The bill will be sent to the commercial department after being approved by the store. And once it comes to the accounts department, they will approve it. Maybe again, hierarchy of approval will be there based on the value of the invoice. And then somebody else will make the actual payment and somebody else will make the bank reconciliation. So you see, so many people are involved. This is segregation of duties. So if you see in an organization during the understanding and evaluation stage that the segregation of duty is not there, one function is being done by more than one function is done by one individual, and there is a risk of, inadvertent or knowingly somebody can perpetrate a fraud, it has to be informed. It has to be informed through our report. You don't have to immediately, unless and until fraud takes place, it doesn't have to be qualified, but through report we can always say, and guidelines are there. The new audit report of the Companies Act, it tells us where to report all these. In bank, we can do this through the long form audit report. So there are places. So we cannot, as a member in practice, we cannot say that how to inform. If you do not know how to inform, you please send them a letter. You can at least send them a letter, document it. It's very important to save our own skin also. Not only helping the management and the other stakeholders, but also to save our skin also. It is very important that we understand, document and notify the client on time. Okay, it doesn't have to be always through audit report unless and until fraud happens. Okay, so a walk through process-wide considerations of the entity level to ensure whether the adequate segregation of duties are there, and IT general controls, application controls, etc. Just keep in your mind for your exam purpose that what is the difference between IT general controls. That's important. Note it down, please. I'm not getting any. Is there any? No question. No question. No question as yet on this. So, no question on yet. So I assume that you are getting it right. If you do not get it, please understand this. Whatever little bit of questions will come, it carries weight. So getting 3 marks, 4 marks, at least score 60% out of that. So don't leave. The ultimate thing is that don't leave. You have to answer everything, isn't it? So please understand. Okay. So IT controls, general IT control is related to the hardware, the programs, backups, the power supply, the air conditioning, these. And applications are related to the software. You know what validations we are having. Can we say, for example, in a financial year, can we put a transaction which is related to the earlier year? I'm sure you will all say, no, we can't. Now, who takes care of this? We know. You are qualified, you are knowledgeable, skillful, you know. But the computer will not know. Computer doesn't know this, that why can't I put in a transaction which is this year for 2021, which is related to 2019, 2020. Computer doesn't know. Computer has to be made aware of it, that if you get a transaction which is dated earlier year, do not accept it. That's a validation, application control. All right, keep that in mind. Can you make a payment? Can you make a payment with a expired credit card or a debit card? All of you will say no. Who's taking care of this? The switches are taking care of this. Switches are taking care of this. Card numbers are all there. So when we say with the middleware, you are inserting your debit card, you are inserting a debit card in the ATM, and you are getting the money within few seconds, right? Within few seconds, so many things happen at the back end. So the middleware, it sends your debit card number or credit card number to the switch. What it sees, at least it sees whether it is a valid number. If it is invalid, many times it happens. It can happen that you insert a expired card, and it will say the card is expired or it is not valid. Well, who checked it? It has not been checked by the database at the back end. It didn't go that far. So it was checked by the middleware. So we need to be careful about that. That's part of the application controls, that you need to check this. These are validations, all right? So we need to understand and document it in RCM, in the risk control matrix. Risk control matrix is a beautiful tool in the hands of auditors, in the members in practice, to use it and to do our audit effectively and efficiently. And now the testing for operating effectiveness. I told you the substantive testing. What is substantive? Test of detail or analytical procedures. Test of details. We will resort to test of detail only when we see that in the RCM, risk is not mitigated by controls. Risk is not mitigated through controls. If we identify that there is a risk which is of material nature and there is no adequate control against that, we will resort to test of details. All right. So we will take a dump. Then how we plan it, how we are going to do it. We will take a dump of the such transactions and we will give it to our audit assistant that you please, and we will tell them what to check. This is what you do. So that's what we decide in the third column that you get to see, that we plan how to test. Okay. And where we see that the risk is mitigated by the controls, we will test the controls. It is very important. We cannot later on say that we knew that there is a control, but did you test it? No, we didn't test it. Then you are guilty of misconduct. You didn't do your work correctly. You were negligent. You didn't do the examination. All right. So clauses are there which we discussed. All right. So you will be guilty. So be prepared for all these scenarios. All right. So we will have what type of test to ensure that the operations are effective and efficient will be done at this stage. Assess nature, timing and extent of control testing. Very, very important. That how we are going to test. Okay. Cash verifications, inventory verification. Is there any test of control there? I give you a practical example. Please listen to me carefully. Rahul has a question. Ma'am, does risk assessment and checking of IT control needs to be done in every type of audit, stat audit, tax audit, GST? Yes, in GST audit you have to, because how that revenue is, the revenue figure is collected, extracted, and then how the tax is calculated. Yes, you have to do. I mean, you don't have to do in very detail, but you should know. You should know how it works. That's what I'm saying. That you should know how the system works for the GST data. And then you do. Yes, in most of the audit you have to. How the tax is calculated. Is the tax calculated manually? Is the tax calculated in the system? Of course you have to know that. We need to know. And most of the times they will say, no, the tax we calculate manually. Fine. Then you will go through the calculation. Yes, the assessment has to be done for each and every audit. So wherever you see that the IT is involved, then you need to see the IT controls. On a very IT controls for the hardware part, you don't have to see basically. Okay. But at least see how the application works. And quickly you can ask some questions, that where is your server, who takes care of the server. Very quickly, you don't have to spend much time, but make sure that you know it. All I'm trying to say, that later on that you do not so no, I didn't ask and I am not aware of it. Ignorance is not a bliss here. You can't be ignorant about a situation. So that's what you have to do. Now, how detailed you do it depends on the situation. All right? So keep that in. No, it is not only for system audit. No. It is not necessarily only for system audit. For any audit, IT, system audit is specific for system audit. They are asking you to verify certain things about the systems. So that's a different scope of audit. But for statutory audit, internal audit, you need to know how are you otherwise giving your opinion on the balances of all the balances that you are signing, you are adjusting, profit and loss account, balance sheet. How do you sign that if you do not know where are they coming from? So it is not at all correct that it has to be only for systems audit, IT audit. It is for all audit. But how much in detail, that varies from scope to scope. Okay. So assess the reliability of source of data. You see, how do you know that the data source is reliable? And you're signing, just imagine, you are signing on the figures as a statutory auditor, and you are not very sure from where did it come. You can't say that I didn't know. Okay, no way. So you need to know how reliable the source of the data is, how complete. Completeness is an assertion that all data has been recorded in the system. How do you know that everything cut off? All data by 31st March has not been recorded into the system. How do you know? Many a times it happens. Don't we put journal entries? Okay, so we know that certain transactions had not been recorded by 31st, and we put in entries. You will remember, system allows you to make entry relating to the previous year even during the current year unless and until audit is done. I ask you a question. I told you that system will not accept a transaction pertaining to previous year subject to the fact that the audit has been closed. If audit is not closed, system will allow you to put in a transaction relating to the previous year also. The moment transaction is over, that financial year is closed. So that is also important for you to see as an auditor, that whether that reporting period has been closed. Otherwise, there will be no meaning for the reports, the data. How do you know? So MIS reports. I'm sure many of you know who have done audit in large enterprises that they monthly close the books of accounts in the system. In the system, they close it so that they cannot make entries of the previous month in the current month. Why? But the financial year is open. You may ask that why I cannot put in a transaction pertaining to month of June, say, sitting today in 1st of September. The simple reason is that after the month of, after 30th May, on 1st of June, you may, or on 2nd or 3rd of June, you produced MIS reports for the board. You produce some MIS report to the board, and then in the month of September, you are making changes in that data. So what is the sanctity of the MIS report? No sanctity. You remember I gave you example on day 1, if I remember about, there is a difference between the GST figure, the tax figure, when the audit was conducted vis-a-vis when the tax was made, only because of the, data entry problem. So these are the control things which you need to see, that how they control. But we cannot be very rigid. Auditors cannot be rigid. There may be, we have forgotten what to do. If the client says, I have forgotten, will you hang me? No, we can't do that. So what we say, we will ask them, what is the procedure of approval process in place, so that in case you have forgotten certain important transactions pertaining to the month of May, which you now want to pass it in month of September with a date, with the previous month's date, approval is required. We will first ask them, can you not put in with the current date? They will say, no, it cannot be, because there will be a compliance problem. We have to put it in the month of May only. Then we have to need some approval. So the control is the approval. We are not saying that you do not put in a transaction, but we need to see whether it is being approved by management or not. They are aware of that it is happening. And so these we should be knowing. Okay. Rahul, I will explain you this later on. Okay. I'll explain you. Okay. You are saying not in IT infrastructure. We need to. We cannot say that we are not good. We have to be good. You are good in GST. You are good in income tax. Why can't we be good in IT also? As I said, we cannot say that we are not good. If you are doing work, we have to be little good. And you have to start somewhere. And with the help of the practice and knowledge of the experience and knowledge and skill, you will become good. Okay, so that's not a big deal. Okay, and consider the completeness and competence and independence of the staff team performing the control testing. So auditor will do the test of control. We will do the test of control. And reporting. Last is so execution is one, and then the reporting. Evaluate control deficiencies. So you know, in most, if I give you practical examples, in most audit of the large enterprises, organizations in our country, which is being done by medium-sized to large audit firms, they send their team who are having skills of systems before the audit starts, before the statutory audit starts. Auditor, maybe the statutory audit would start from March or from April, at least from April, latest by April. So they send their audit team who are specialized in systems in January, December, January, and then they go through this process. The slide that I am putting up, they go through this process. Okay, because here whether all the transactions of March has not been put in is not important. We are actually understanding the environment in which the transactions are put in, managed and controlled and reported. Okay, so they go and they do this process and identify and report. They evaluate the control deficiencies, significant deficiencies, material weaknesses and remedy for weaknesses, and internal control memo or management letters and auditor's report. So this doesn't necessarily have to go to the audit client unless and until the control weaknesses are such that it can give rise to a qualified opinion. This report is generally shared with the audit team members. So audit team members. Okay, that's what we are saying when we are saying in the third column, if you see the last bullet, the independent. So this is a separate set of team probably, okay, who may or may not be part of the main statutory audit, okay, team. So this will be reported. It could be reported to the management, but surely it will be reported internally to the audit, assurance partner and his team, so that they can plan their audit properly. That this is the area where more, where controls are there, and we may not test very many transactions, but these are the areas where controls are weak, and you have to, do test of detail. So that's important, and planning can be done well, so that because your target date is there, we have to complete the audit much, within a given point of time. So they start sending the auditor much before closing, much before 31st March, so that they start the routine job of vouching. What is the problem if I can check the purchase order? If there is some material weaknesses identified by this team, that there are some problems in, purchase order approval, there is no problem in sending a team to check in detail the transactions in month of February. It is only 1 month is there. How many transactions will be there? That part will be checked in April, but they can already check. It is possible to check all the purchase orders as per the sample from April to February, isn't it? So this is the way the audit needs to be planned, so that we can do it effectively, efficiently and on time. If we do not do it on time, again we will be guilty of misconduct as per the clause in first schedule. Okay. Now we have to remember a little bit about the internal control framework which is sponsored by the COSO. COSO is Committee of Sponsoring Organization. It is from US. It is an independent body who came out with this framework. Please remember for your exam purpose that this is a framework. You don't have to remember much for your exam purpose really, that this is a framework, and it is being integrated framework developed by the Committee of Sponsoring Organizations, COSO, and it is last updated probably in 2016. It talks about enterprise risk management and things like that, ERM. So it talks about it started, when COSO started, it started with the internal control framework. Now it has expanded its horizon much more, and it talks about enterprise risk management, not don't have to discuss much here. So internal control talks about these. Please remember these couple of things for your exam purpose. Okay, that's what are the components of the internal control framework. So control environment, risk assessment, control activities, information communication, monitoring, and these are applied where? Okay, why this has to be looked into? Why there are certain things which an auditor should follow? We need to look into the control environment. We have to do the risk assessment, which we discussed. We are again going to discuss. We need to see the control activities, and we need to see the, the communication, information and communication that passes from the top bosses to the, down the level, and continuous monitoring is, flow of communication and information is there so that the monitoring is effective and efficient. So, these two together. And how the monitoring can happen? Monitoring can happen only if there is a continuous flow of information and communication, right? So, that can be, these are part of the internal control framework. And this is done for the operations, for reporting, and for compliance. Reporting is for internal consumption and also for external consumption, like statutory compliance. Keep that in mind. MIS reports are for internal consumption. So reporting contains two types of reporting. One for internal consumption of the organization, the another for the external consumption, stakeholders. And today it's mainly for the compliance purpose. All right. So, say listed companies. So they have to give out a whole lot of information quarterly to the SEBI. Okay. So those kind of things. Then banks. Everything. You see GST, income tax. These are all compliance. We have to report accordingly. And operations. Unless and until the operations are done effectively following these controls and mechanisms which are given out by internal control framework, the other two will not be done properly. So for your exam purpose, please remember internal control is not only related to accounting. Accounting is the last thing. Accounting, it is recording of it is a bookkeeping, that where we are passing some entries, double entry system, or even today there are still single entry system in government accounting and all. So it is, accounting is just recording in a certain way, okay, as has been promulgated in our country based on certain international guidelines coming from time immemorial. But there are situations which give rise to such accounting entry, right? Which is operations, which is an operation. All right. So we need to have an internal control framework on those also, which gives rise to that balances on which we are ultimately attesting. So we have to be very careful. You see, we go back. We are just signing balance sheet and profit and loss account. But you see, background, there are so many things we need to keep in mind. That's it. So it's very, very, important and complicated. And then the third angle is here. The third dimension here, it's three-dimensional, So the third dimension here is basically, though it's a cube, we are showing the third dimension only. So it talks about at the entity level. Entity level means at the organization level. Organization, macro organization level, across. So at the entity level, division, operating unit, function. So summary is that everywhere, from the organization as a whole to the smallest function in an organization that you can identify. So from micro level to the macro level, it will apply everywhere. So that's what we are saying. Keep this in mind. Okay. So how do we do a risk assessment? Let's come to that. How do you do a risk assessment? So business objectives and objectives and goals. Identify events that affect achievement of the business objectives, assess likelihood and impact, response, mitigate the risk, and assess the residual risk. Please remember for your exam purpose, this is not an audit risk assessment, okay? This is the risk assessment from the enterprise. This is the enterprise risk assessment. Please remember, this is an enterprise. You can say this is an ERM, enterprise risk assessment, part of it, and which we must understand, document, and then we can plan our audit. So what is the business objectives? So when somebody can ask that, do you have to do it every time? You have to do it at least the first time. You have to do it the first time when you get the audit for the first time. and the second time you go, the third time you go, you just need to review it to see that if there is any change in the business objectives and goal. Why we need to review it? They might have added new line of business. They might have discontinued with some line of business. So we need to review it. Generally what we do is we maintain a permanent audit file. We maintain a permanent audit file where this we put in. This is done only at the beginning. Before we do start an audit, we make this documentation, put it in our permanent audit file, and then we go back the next time we review. We take out the data from there and just talk to the client and make the changes, make the amendments. So we need to understand the business objectives and the goals. IT is just part of it. IT is used to support the organization to achieve their objectives and goals. They assist an organization. They are not parallel. All right, they are not parallel that somebody is using an IT, so I have to also use an IT. No, it's not like that. Any organization is put in an IT so that to effectively achieve the business goals, right? So we have to understand what is the business goal and how through IT implementation they could have achieved it. Identify events that affect achievement of the business goals. So they say today you see most of the many years now, several years. I mean, we were knowing about the online shopping B2B business for several years now. Now B2B, now Indian companies are also on B2B, isn't it? You can get everything that you want on a B2B today. Okay, so you can purchase anything you want to from online, whether it's a Flipkart or whether it's from Amazon, anything. So, and for any company's products are available, and you see how it has become so more important today when the pandemic it is in full swing. So many people are using the online platform to purchase their basic requirements of groceries. Big Basket, all right, Amazon Pantry, Spencer's, you name it. It is there everywhere. Everything you get from, I don't have to tell you, everything you get. So you see the organizations who have used. So what has been the business goal for these organizations? All right, to have more and more reach of their products to their platform, okay, and which will naturally add it to their revenue and will add it to their profit share, because they use information technology platform. They could reach out even during the pandemic, and their sales may have gone up. I know publishing houses. I'm giving you a practical example. I know publishing houses, very IT savvy publishing houses and very renowned publishing houses. Their sale has increased many folds during the pandemic because they are taking orders online and they're delivering. Delivery is physically, but the moment the unlock happened and courier service was restored, they started, the delivery, and they said that their revenue has increased many folds through these online purchases, much more than what they used to sell from the counter. Because people are at home, they're renewing their habit of reading and all. So you see the organizations who are able to give this kind of support, it is effectively helping them in achieving the business goals. That's what we need to do. Assess likelihood and impact, the risk, that what is the problem. When it affects the achievement, it should not only be positive achievement, also the negative side of it. Are they too dependent on IT and they do not have a backup system? So what happens if the system doesn't work? They will go out of business in no time. You may have to report, an auditor may have to report that there is a risk of going concern. They do not know. So it is important that they have to have a backup. So those are the likelihood, assessment of likelihood and the impact. That what happens? What is the likelihood that the server will not work? So these kind of knowledge you have to have. Okay. You have to have that. What kind of hardware they are using? Are they using some, assembled hardware, or they are using good hardware? So, and this is not that you have to be knowledgeable. When I mean these are available on the public domain. You can go and check. Suppose somebody is using a HP server. You can check on online, in the HP website, and see what they tell, what they say about their server, how long they run, what kind of environment and physical conditions it required so that the server can go run without going down. So these are there, and then you assess. Okay, you don't have to remember everything, but you need to know that, this is the place where I can go and find out information. It's like an open book examination, so you don't have to be, you become expert like this, that you know where to find it. At least you should be knowing that much. Okay, assess the likelihood and impact, and then what is the response for against that negative impact? How do you mitigate the risk? Please remember, for always, and of course for the exam purpose, that risk can only be mitigated. Risk cannot be removed altogether. That's the fundamental in risk assessment and mitigation. All risk cannot be removed. An auditor cannot say that these are the controls. If you implement, there will be no risk. No, we can say it will be mitigated to an acceptable level. Acceptance is up to the management. We do not tell them what to accept and not to accept. The client will say that yes, if it goes down to such a level, once a year it can happen, that is acceptable to us. To somebody, even once a year doesn't work. Just imagine, a couple of days back only, Google went down for couple of minutes, if not for 1 minute. It went down. And there was a huge hue and cry across the world. So it cannot be afforded for even Google for a minute to go down. All right, because their goodwill, they have so many consumers, their goodwill is there, so we cannot think of them going down, and they must have such kind of controls to ensure to mitigate such risk, where their out time cannot be more than 1 second or things like that. You need to keep this in mind and assess the residual risk. As I said, risk cannot be 100% removed. We have to live with the residual risk that this can happen, and then probably we can say act of God or things like that. Okay, residual risk is not such a risk. Quantity of such residual risk is not such a quantity, qualitatively or quantitatively, whereby a company can go out of business. Okay, so whatever the company thinks that we will live with this risk, we will not be negatively impacted, is the residual risk. How the risk can be mitigated? The risk can be mitigated with general IT controls, application controls, and IT dependent controls. IT dependent controls I am saying because it is written, otherwise there is no specific IT dependent control as such. General controls and application controls. IT dependent controls are which is enforced. It is enforced by human being into the information system. There's not much difference. It is part of the general controls only. So general controls I told you. Okay. General controls are, look into this carefully, my dear students. The blue ones are applications. Okay. You don't have to remember this. These are just example. It could be anything. Okay. It could be anything. So we are just saying where all it is there. So in the first one, it is the SAP, that's the application. SAP is implemented where you need, what you do with SAP application, you put in data, right? Where the data will be stored, the data will be stored in the database, which is Oracle. So it is basically maintaining that database is an IT general IT controls. That the database is maintained, tuned, all right, the server, and it is on which it is lying. It is also again implemented on HP because it is probably an HP server we are talking about, on any Unix, on operating system. HP UX is just an example. It is on one operating system. I said it has to be at least one operating system. Okay, so HP Unix is just an example. It could be Linux also. Anything. So that's the operating system. Operating system and the database system is part of the general IT controls. And application, which is the SAP R3 here, is the application controls. Because why? The validations, application related. That is the business related. Application, to simplify it, if you are not understanding, it is a business related. Transactions, business related transactions are processed through application. And the controls that are necessary for conducting the operations of the business are also embedded in those applications. That's why it is called application controls. Do I please tell me, my dear students, if I need to repeat this? Okay, if I need to repeat this. So through application system, business operations are done. Okay, business operations like purchase, like sell, normal expenditure. So you put in a transaction in SAP R3. All right. So you need to have some control over such transaction. Can you put in a few crore of expenses without any approval in a system? Yes, you can. If you do not implement adequate application controls, you can. System will not understand. Human being, we understand what kind of control is necessary. Say, for example, I'll give you an example. Can you withdraw money more than certain figure, certain amount from bank without a KYC, without a PAN card, without a PAN number? No, you can't. This is an application control. If it is less than that amount, you can withdraw. Okay. Another example, you want to withdraw certain amount. Many times you will see at the tailor, if it is not through ATM, at the tailor, they will ask you, they ask the approval of the manager. Why? In other cases, they were not taking approval of the manager, because it is a segregation of duty based on the value. That this much of transaction can be done without any approval by the person sitting at the tailor, the cashier. But if the moment it is more than rupees X, another approval from the manager has to be taken. If it is more than that amount, the third, cashier will approve, manager will approve, the branch manager has to approve. Three approval. So this is the segregation of duty, and this is done in application control. Unless this is done specifically, system will allow anything and everything. Can you have a negative cash? You will say, all of you will say no. Why you cannot have a negative cash? System doesn't understand this. Because this control has been put in specifically that expense cannot be more than the cash we have in hand. That's the logic. System will not accept. Many times if you go through the ledger, you might find a negative cash balance in the cash balance, cash ledger, GL code. Why it happened? Because the timing of the receipt is wrong. Expenditure was made before the cash receipt entry was done. That's all. Physically cash was there. You cannot have negative cash, right? But the entry was incorrect. So negative cash is so system also. So we put in a control. You do not have such control unless and until put in tally. You can have a negative cash, but there is a provision in tally where you can, say that negative cash is not allowed. Negative stock is not allowed. Where we are doing this? We are doing this in application, and hence it is called an application control. Okay. Please remember that, my students. Okay. And as I said that these IT dependent controls are initiated by human being, and hence they are called IT dependent controls. Okay. And then we have these are our other software name. These are our other software name, which is on MS SQL or Microsoft SQL Server. Don't get bothered about these names. These are just examples. You don't have to memorize this. Please remember, you don't have to memorize this. All you have to know is that where is the operating system, why is an operating system required, what is a database is required for, what is an application system. Operating system and database system, for your exam purpose, is part of the IT general controls. Application is the front end, the example like Tally, SAP, they are part of the application controls. That's all. If you remember this is good enough for your exam purpose. The rest you learn when you start working. Okay. I hope I am on time. Yes. General IT controls. General IT controls. So, just a little bit, because general IT controls you are not much aware of probably. Some of the things you can, we can take this as a checklist. You can read these please read these guidelines, or not the guidelines, I'm sorry, the study materials. Why I say that you need to read the study materials. Use what are the activities which are part of the general IT controls: data center and network operation, program chain, and access control, access security. Let me clarify a little. I'm not getting any question. I need to know whether you are understanding. Please tell me if your understanding it's correct or not. You're quiet for quite some time now. Okay. Data center and network operations. Overall management of the computer operations, that systems are all working, the environment is cool, power supply is continuous, AC is continuously working on a changeover basis, physical access control is good enough, it is under lock and key, nobody is working there, no one is drinking tea or having food inside the data center. So those kind of atmospheres implemented and continuously maintained. Jobs, how the jobs are processed, batch jobs, preparing, scheduling, and executing. Backups, how the backups are taken, how backups are taken. How often today you do not know in an online system how many users are there. Backups are taken, hot backups are taken. That when users are also there, backups will be done. We practice ourselves that we put a backup. We also have a backup of our own data. So similarly, you can well understand what is the importance of the backup in any organization, small, medium to large organizations. Today most of the medium-sized to large organizations, they are putting backup on the, on the cloud, maintained by large corporates like Microsoft, Google, and all like them. So they because they know I don't have to take care of it much, as long as, because we have in a service contract with, say, Oracle, or with Google or Microsoft, they will maintain our backup, for which they will of course charge us, but we don't have to bother about it. So if an organization, if you see such a situation that the backup system is being maintained by Google or Microsoft, and you go through the contract, vis-a-vis, you see an organization where this backup is done by within the organization by the internal IT person, you probably have to weigh the risk and control in a different way. The risk would be, there is a probability that the risk will be high in case where it is being maintained in-house. There is a risk that they might miss it, or you have to resort to more detailed testing, that you show the backups. You show the last backup. Do you read the backup? Whole lot of things. Okay, there is a separate checklist. So first you have to identify what kind of, threat is there if backups are not kept. So they may go out of business. And then what is the control to mitigate such risk? So mitigation is that one company X is having the backup contract with Google, and another company is having doing it in-house. So your test of control will be different. How you will test who is maintaining company X, who is having it with Google? You cannot go to Google and test it. So you will go to the contract. Your test of control, how do you do that is important. Okay. How will you do it in the first case? You will go through the contract. You may ask for a service organization report, SSAE 3402, SOC report 1, 2, and things like that. That's there. SOC report, SOC 2 is the report for service organization. So Google is a service organization who's giving services to your client, this company X. So you can get a report from there, that the all controls and things that will be reported. That is also done by a chartered accountant. That can be done by a chartered accountant, Indian chartered accountant. Acceptable. And you can do that for company X who's having data backup system or contract with Google. And in the second case, where it is done in-house, you need to go through, like you show us the, when did you last take the backup? You probably can be present physically when one day, or you can send with a audit program your assistant to review or to witness physically. This is the method of audit. You are physically being present there to see how the control is actually being operated in practice. Okay. So you have to decide that. Recovery from failures, BCP, GRP, help desk functions. We have problems and we call. If there is a problem, whom do you call? So that's the help desk functions. Very, very relevant these days. Service level agreement. As I said, what kind of service level agreement are you having with Google, who's maintaining your backups? Okay. And if you remember, in Companies Act, it is said that a copy of the data must reside in India. All right. You must be, I'm sure you are aware of this. So you are non-complying. If you do not know or you fail to comply, a material misstatement it will be if the data is not, it's a company, Indian company, and their data is not residing in India. It could be a company it's a subsidiary of a foreign company, but this is a company in India under Companies Act 2013. It is absolutely mandatory that they must have a data also residing in India. They can have data any other place, okay, provided subject to different conditions and controls. That is their choice. But as far as we are concerned, our Indian law is concerned, the data must reside in India. And if you fail to identify that and mention that, it will be a major guilty of, you can be a major falling into a major guilty of misconduct. So be careful about that. Service level agreement, where the data is lying, how it is being monitored and complied with. Documentation, manual, various service reports, audit reports, yearly. You know, these are the SSA 3402 report, the SOC 2 report that I'm talking about. These are yearly reports. And if the moment there is a change in the operations, it is important for them to get a new report. So an auditor, the auditee must be aware of his rights. So you being an auditor, you should make him aware of his rights, that you ask for such report. And organizations, I'm giving you practical examples. The organization asks for such reports, that it is being done by, you are a service organization, you provide me, because you have to understand there are so many GST service providers are there. How do you know that you are auditing for a company whose GST is being uploaded by this ASP? How do you know they have adequate controls in place? How do you know that they are not disclosing the client's data? Disclosure is it can give rise to a lot of problems, inadvertent and knowingly doing that. So how do you know that they are not disclosing it? So it is absolutely your responsibility to find out what kind of controls the service organization is following. Now, you cannot say that I will go and do the audit there. No, you ask for these reports. And if they say that we do not have such report, you please mention it that in the report, in your audit report. If they fail to give you such audit report of service organization, because the auditee was not aware of it, you mention that in your audit report as part of internal control failure. And they should immediately get such a report done. Many times many organizations, they do not report it immediately in their audit report. They give some time, depending upon the quantum of the risk. They said, okay, we will get it done by the next quarter. When you do the audit, we will do it. By that time, you will get the report. You wait for next quarter. If then also it is not done, then you report. It depends. But it is important for the auditor to know this and make the auditee aware of his rights. Program change. Okay, package software program cannot be changed. Can anyone change the Tally software? No. But there is a scope. The Tally business partner can change a Tally business partner can change the program. You have to pay for it. That you need say for example, you need a specific report which is not available in ERP, in the Tally. Tally is being widely used for mid-size organizations, but that report is not available. So you can talk to the, that partner who actually from whom you have purchased, and if they are into these customization, they can do the customization for you. Okay, so that change management has to be in a controlled manner. We'll not go into this because it is not within the scope. But remember this: change request, making changes, test changes, applies changes in production means live. Production here doesn't mean manufacturing. Here production means that going live, not practice, not test. Documentation and user training. Training is important. The program change is applicable in package case system. It happens for customization. Say GST rates changed. A program has to be changed, right? Program needs to be changed probably. New reporting format comes. You probably have to change. IFRS index is coming in. Index has come in. It has to be changed. So those kind of things are always done through program change, and adequate controls should be there. Otherwise, it is a risk that because the program was changed incorrectly, it actually impact the balances which you fail to identify and disclose. Very serious offense. Access security. Access, I'm sure you are aware of this. Everybody cannot get access to everything. All right, it should be based on need to know basis, need to do basis, based on your job profile. Simple. Where all? So that this is in large organizations guided by security policy and procedures. This is the requirement in semi-listed companies. These are the requirement. What kind of policies and procedures are there? All right. That includes also the security policy and the procedures. That what people should be doing, and again do's and don'ts. It doesn't have to be 200, 400 pages thick book. It can start with certain do's and don'ts. It can start with the audit firm. And it is surely there in all listed companies today, and many medium companies. Most of the medium companies have started following this. As an auditor, we should also, make the aware small auditees that you should have do's and don'ts. As far as the access security is concerned, you should be knowing who's getting access to what. At the application level, data, everybody should not get to see data. I'll give you an example. Auditor gets to see whole lot of things. Auditor gets to see whole lot of things. But auditor, everything rather. But can you change your data? Auditor cannot change your data. So that is a security, that you can have only view access. You cannot have read or write access. You can have read access, you cannot have write access. So this is a access security. Similarly, a person, I gave you the example of bank. A person can make a payment at a teller up to rupees X. The moment it is more than rupees X, it has to be approved by the manager. He cannot give the cash. Can he do that? If he is not aware, he will not be. So if you have noticed how a teller works, a person sitting in the cashier, how he works, he will make an entry in the system and then he gives you the cash. Has it ever happened that he will give you the cash and he will not make an entry? No. He will lose his job probably. Simultaneously, real time it happens. So the moment he goes into the system to enter that transaction, update the transaction, it will ask for a password. And without that password of that manager being put into the system, he is not supposed to give you cash. If he does so, it is a misconduct on his part. All right? It is a misconduct on his part and he won't do that. That's the access security. Operating security, operating system level security. Can we go directly to the operating system and change certain parameters? No, we can't. Can we go to the database and change certain parameters? No, we can't. We should not, ideally, unless and until it is our job to do it. Okay? Physical security. Can we go any place? Data center, we can just walk in. No, we cannot. Because it is not our job to go to the data center. If we need to, as part of the auditor can be taken, but it needs a lot of approval. It needs a lot of approval. Okay? System administration and privileged accounts, DBAs, database administration, they have access to everything. So super users and all, they get access to the entire system. So these are very restricted use access privileges, because the privileges are very high. So privileges are based on, remember for your exam purpose, privileges are based on need to know basis, need to do basis. And this has to be done. And you need to see that. How will you test it? Okay, let me ask you a question. You are all very quiet. I need the answer. My dear students, if you are there, please tell me. How do you test that the segregation of duty is followed? That the access has been provided based on a job profile. I'll give you some more example. to case study. Let me put it as a case study. In an organization where you are auditing, purchase orders up to rupees 50,000 can be approved by the purchase officer. 50,000. If it is more than 50,000, up to 1 lakh, it can be approved by, it has to be approved by the purchase officer and manager. Up to 50,000 by purchase officer, up to 1 lakhs by both purchase officer and purchase manager. And more than 1 lakh, it has to be by the purchase general manager. As an auditor, and you are a statutory auditor, how would you ensure that these approval procedure, which does the assertion, what assertion it satisfies? If it is put in properly, segregation of duty. How will you ensure that this has been done? I give you 2 minutes. Can you please answer? Take 2 minutes. That purchase officer will approve if it is for 50,000. If it is up to 1 lakh, it has to, more than 50,000 and 1 lakh, it has to be by purchase manager and the purchase officer. I mean, if it is greater than 1 lakh, it has to be by the purchase general manager. 3 persons. If it is more than 1 lakh. Please answer. How will you do it? Okay, probably you are thinking too much of writing. Okay, let me tell you. So you will take a dump of the data, purchase data, and you will filter it or sort it on the basis of the value 50. Filter it based on the value up to 50, more than 50,000, 1 to 1 lakh, and more than 1 lakh. And then from system, you will get who are the approvers. You download this in Excel along with the data, who are the approvers. The moment you see, you get some examples or you get some situations, cases where in more than 1 lakh, it has not been approved by the GM. It is a violation. Now, whether it will be reported, violation to be reported or not, that you have to decide based on the materiality. Based on the materiality. Okay, but you may choose to decide that out of, say, 50 lakhs of purchase order, more than 1 lakhs, only 1 or 2 cases are there where it was not approved by the GM. Okay, so you decide that no, we will not report it. It is not material. That's fine. But you also need to find out that how could this happen? It is done through system. So how could it happen that that purchase order, which is more than 1 lakh, could be released with only 2 approvers, the officer and the manager? That means system has failed somewhere. How the system failed? Somebody had gone and changed the parameter. You see, it will give rise to a cascading effect of lack of control, loss of control, which, if not addressed immediately, it will give rise to a material problem tomorrow. You may choose to not report because today it's not material, but please do not choose to not report it. Because today what is not material, if it is remained, if it is let it like that unattended, it will become a material in no time to come. Surely it will come. Okay? So please, we have to address it that way. Some application controls. Okay, some application controls. What do we mean by application controls? As I said, application controls are those controls which are related to the application. Application is what, my dear students? It is the place or a means through which we process our business transactions like purchase, sales, expenditure, journal entries, whatever you can think of in a business environment, that is done through application software. Okay, business is done through application software. So there are a lot of controls there. I give you only couple of them for your exam purpose. Sequence check. Sequence check is that, don't we see the voucher numbers? Voucher, when you just think of your tally. I'm sure if you can visualize, you will understand it better. Think of tally. When you are putting in a transaction, tally gives the voucher number automatically, right? You can configure it like that way that user will not give the voucher number. The voucher number will be generated by the system, and that's a good control. Why should I give it? User may not remember the voucher number. The voucher number which has happened, yesterday, and when I start the day today, I have to go back and check. It is not required. Such hardship is not required. Let this be done by the computer. Okay? So you configure tally, and you can prefix it, suffix it, how it will be generated. The number system will generate in sequence 1, 2, 3, 4 like that. So prefix could be, maybe 2019-20 slash so and so, month slash so and so. But the last number, sequence number, will be generated by system. Okay? So if that is so, that's a good control. How do you find out if a sequence is missing? Now, where you have to understand how this is related to our audit. Why we are saying these special aspects of our audit. In our audit, we need to keep this in mind. How does it impact our audit? Any idea? Any idea? Why do we need to check a sequence? How does it impact our audit? It does impact a lot in audit assertion. It may give rise to a material misstatement. Okay, let me give you. If you don't see that if a transaction has been removed, deleted, which could be of a material nature, and you didn't report it, will you not be guilty of misconduct, of misstatement, which you failed to disclose under second schedule? I think you will. Okay? And now you ask me, how do you find out? It's a huge, transactions running from April to March. It runs into lakhs. How do we check? Very easy. You take material balances. Important point here, note is always material balances. Which account balances we will check? You do not have to probably check each and every account balances coming in profit and loss account, right? Or in balance sheet. We check only the material ones based on our risk assessment. So suppose you say that, cash expenditure more than so and so, which is also important for your tax audit. How much has been, what is the cash expenditure for more than 20,000 or whatever the limit is today? How many such transactions are there? How will you know? You take a dump of the ledger balance, make a filter of your desired parameter, 20,000, 50,000, whatever. And then you will get to see, for 20,000, you find out how many transactions. For sequence, you don't filter. You just sort it and see whether the number is in sequence. It will download in sequence only, in sorted manner on voucher number. And then you see whether it is coming in sequence as 1, 2, 3, 4 like that, with suffix and prefix. Sequence number. And you suddenly see that some of the numbers are missing. After 4, there is no 5, but there is straight away you are getting 6. Identify that. Ask the question to the auditee, what is this transaction? In accountancy, we are not supposed to delete a transaction. It is a golden rule. We have to pass a correction entry, right? We can pass a adjustment entry, correction entry to nullify that error. We do not delete that transaction. That's a gross violation against the principles of accounting. Okay? You can pass a corrective entry. So in most of the software they allow, but we need to, like in Tally, it allows. Straight away you can delete. How do you find out? You go for a client who are maintaining transactions in Tally. How do you know that they have not deleted certain transactions which are of material nature? You need, very simple. Just download it, see if anything is missing in sequence, identify and ask questions. That's the sequence check. They are in sequence. Okay, use a limit check. What is the limit? Basically, this is a limit check, okay, limit check. What is the limit check? The example that I said, say rupees 50,000 can be withdrawn with cash, can be withdrawn without a PAN number. That's the limit. The moment you withdraw 50,000 in cash without a PAN number, you cannot do it. So that's the limit. Okay. So these are programmed in the application. These are validations. If the word comes as validations, please remember these are validations. Don't get confused. Okay. Reasonableness. What is percentage wise? It can be 1 or 2% more or less. Suppose you are purchasing some liquid material, petrochemical business. You are purchasing some diesel. Any organizations in manufacturing factories, they use HSD. Okay, diesel is used. Now, diesel cannot come in exact quantity. All right, it cannot come in exact quantity, and the client is using a high-end ERP system like SAP. So they have made a purchase order for 1000 kiloliter, and when the material came, it is more than that. System will stop. They say, no, I will not accept less than 1000 kl. I will not accept more than 1000 kl. One cannot be so rigid. Okay, there are many conditions, and why it is less. It has evaporated. Okay, it has evaporated. That's why it is little less. Now, how much it can be accepted? How much less it can be accepted? How much more can it be accepted? That's what we do in reasonableness check. That if it is less by say 1%, that is completely on the client. You don't decide. All right. So if you see it is unreasonable, you then report. If you see they are saying, okay, even if it is less by 20%, we will accept. That's not reasonable. That there your reasonableness should start working. That do you find that the reasonableness parameter that they have fixed is correct or not? To your mind, you can always ask the question. Instead of giving report in writing, you can always ask the question. How is it possible that 25% less will come and you do not deduct? The impact is that you are taking 25% less, but you are not deducting from the vendor. Then the problem starts. Okay, so you have to keep this in mind. So these kind of things, that I'm accepting 25% less, but I'm paying more. There could be you can smell a rat there, dead rat there. You can smell a dead rat there, that there is a possibility of a fraud being perpetrated by this person in purchase or in stores or in collusion. Fraud is not done by only one person, it is in collusion. That means these 2-3 persons in collusion, they will say, okay, I will accept the material even if it comes less 25%. I will pay you the full amount. This is a verbal communication with the unscrupulous employees and the vendor, that I will make sure that you get the full payment of 1000 kl, but you pass me a percentage. This happens. This very much happens. I'm giving you practical examples. Okay. Demurrages, because demurrages are there. Huge quantities coming, and if you say coal, I have seen cases, imported coal is coming from foreign land, and such variation is there, and for which the deduction, if is not made from the vendor, and mind you they are paying in dollar, it goes into crores of rupees. And if this can be identified, we fail to identify, it is a misconduct on us. And if we tell them, it goes to, in organization, it goes to, the consequences on the employee is very severe. So it is our responsibility to check the reasonableness, and if you think that the parameter is not good, you can always talk to them. Format check, very simple. How the data is accepted on the screen. The date. How do we format it? DD, MM, YYYY format. Right? DD, MM, YYYY. This is the format. So whatever data we put in, it is the first 2 digit is date, second 2 is the third and fourth is the month, and the last 4 are the years. Okay, but please remember, this is stored in the database in different way. Okay, these are in US, it is MMGDYYYY. Okay, so the database can store it in MMGDYYYY. But when they will show you through the programs and format, because of the format check validation, it will be shown you as DDMMYYYY. Otherwise, 11th of October or 10th of November will be completely confused. And it has impact. It has definitely have impact in account balances. I don't have to explain that. So these are the format check. The decimal places. How many decimal places you will store? For INR, probably 2 decimal places, but for dollar, it could be more than at least 4 decimal places, if not maybe 3, if not 4, those kind of things. Okay, these are the format checks. Some of the examples. I just gave you some of the examples. Existence check. Existence check is that whether the master data is there. Can you purchase something which is not there showing up in the system online? Now those products which are being shown, they are master data. They exist. That's why you get to purchase, right? So if it is not existing, if it is not there in the master data, you cannot pass a transaction entry for that. If a vendor is not there, if a customer is not there, whom do you sell? Many systems allow, so master data is important for us to check as an auditor to see, and you might find some masters like temporary customer, guest customer, XXXX customer. These are the things which you must see. And it is very much possible that you might come up with some transactions which has happened, transacted with such, temporary or guest customers, and which could be material. So if you fail to identify those, it will be your misconduct. You cannot say, now we have to, so you see, these are the control states. So master data, we need to see, and this can be done very easily, quickly, by use of automation by the auditor, by using CAT tools or Excel. Excel is also could be used as a CAT tool, right? Computer assisted audit techniques. Computer assisted audit techniques can be used to quickly identify this. Dependency check. Dependency check is that something is dependent on something. For example, EMI. EMI of a loan can happen only if there is a loan, isn't it? The loan has become zero. Can you still deduct EMI? You are laughing. But if you do not give this control in the system, an IT guy may not understand. So he will keep on deducting the EMI in the program even when the loan has become zero. All right. So control should be there that the moment the loan has become zero, we cannot deduct any more EMI. Some more example. You cannot employ a person who is less than 18 years old. Date of birth. Okay. So date of birth. So these are all KYC. Know your not only KYC, customer, know your employee also. So these details are put into the system. If you see the date of birth, system will tell you the date of birth is so that his age is he is an underage, cannot be employed. Like for us, we discussed on day one, membership. If a very intelligent student passes the final exam under 21, your name will not be going in the member register. Okay, so it depends on the age. So the membership, whether you can be a member, it depends on the age. That's the kind of a dependency. Some example I gave. Okay. We need to identify certain risks and controls at the entity and the process level. So remember, if you remember the cube of the COSO framework, the internal control framework, we were talking of the entity level. That's the reason I put up that, diagram, that figure, to remember that it is applicable That way the risk and controls will be there everywhere, at the entity level, at the process level, at the detailed process level. What do we mean by process? The example that I'm giving, that whether you can withdraw money for more than 50,000 without a PAN card, right? Whether you can process a transaction purchase order which is more than 1 lakh of rupees without having the approval of these three approvers. Okay, so these are the process level. These are the detail level, controls against the risk that the purchases are not fraudulent or they are not unapproved. You are purchasing for something which is not required. Okay, purchase will be done only when it is required. And how do you know it is required? When it is approved by the approving authority. So this is process level, detail, purchase process, sales process. Okay, detail level. And entity level is macro, as the entity as a whole. Entity as a whole. For example, it's a control environment. Who are the directors in the organization? What are their credentials? Where are the directors? Are they qualified to become directors? Do they have, what are their backgrounds? Probably these are good. These are the things which you need to document for the first time when you are taking up an audit. These are important. These are all controls against the risk at the entity level. Who are the key members? Key personnel in the organization. Why these are reported? Okay, their credentials there. You have to check whether the director has a dean or not. These are the risks that he cannot operate as a director if he doesn't have a dean number. So those kind of things, the risk and the control. So this will be applicable. Please remember, from a macro level to the detail level, division, unit, process, everywhere you think of an organization and its operation, everywhere there is a risk and hence control should be there. Whatever way, it could be at an application level, it could be at the physical environmental level, it could be at the any general IT controls level that you can think of. Okay, not to forget the physical control also. Somebody just walks in. Why do you have a guard at the gate? So that every Tom, Dick and Harry cannot just barge in. All right, so we have to, that is also a risk. That's also a risk. And why it's a risk? That is, the company goes under siege. Somebody gets into and it's under siege and people are at risk. So one has to be careful about that also. It is part of the HR policy which is required. Okay, so please remember that risk has to be identified at the entity level up to the detailed process level, and naturally the risk control matrix will identify not only the risk but control against each of such risks. Okay, organization as a whole, process, individual process in the organization like procurement to pay, order to cash, etc. I just, for your exam purpose, I picked up from the book the sequence. Please remember, for your exam purpose, process level means sequence of activities that happen. I have already explained the sequence of activities in a purchase order, that you raise a purchase order. This is talking about sales. Let's talk about the sequences in sales. So what is the sales? That we accept a sales order. Okay, it could be online, it could be over phone. It depends upon the policy and procedures that the organization follow. So you take the sales order, you arrange for the delivery, you send the invoice, and you take up and you get the receipt. That is order to cash. It starts with an order and it ends with the receiving the cash. That the debtors, at what point the accounting entry will happen. Will the accounting entry will happen when there is an ordering? No, there will be no accounting entry happens when an order is received. This is the delivery. When the delivery happens, is an accounting entry happens? Yes, that the stock goes down and the cost of the goods sold is debited. Okay, when the invoice happens, the sales is accounted for. So you see, these needs to be documented through flowchart narrations. Even if somebody cannot draw a flowchart, I find writing the flowchart is far easier than writing it this way, and then identify what is the risk and the control. It is very simple. For your exam purpose, if question comes, remember that. Okay, and taking also as part of the sales order, the credit line. Before delivery, one has to check the credit line, not to forget, since it is not possible to give all the details here. Like before delivery, one need to see what is the credit line, because this customer is picking up material on credit. So is he credit worthy? Is his credit limit still available? Credit limit is exhausted. So what will happen? The order cannot be delivered. Sales order can be taken, but delivery cannot happen. Delivery means goods going out. Okay, you will have no control over that. You cannot get it back, and so your money will go. So the sequence of that control is important. When the control should be executed. Take the order. He may not have credit, but he said that I will put in money. I will make payment. How the credit line will again go up the moment he makes the payment. Releases the payment. The data balance goes down, the credit limit goes up. But that needs to be checked. It is not to be checked manually. It has to be checked through system. Alright. So these are the things which are done through. These are the sequences. These are the sequences and one has to keep that in mind. Okay. Invoice is not created. Many a times invoice is created at the end of the month or period. Okay, it is not necessary that you have to send an invoice. Today things have become different, It is delivery come invoice, so it goes automatically. But commercial invoice may be again being sent separately to the finance department of the, of the customer. So a whole lot of things are there. How you monitor the receipt. Collections are not there. It is lying forever. So you just imagine your data balances is going up, and it is not only good to, say that, okay, you make provision for that. You make provision for that. Why did it go? Internal control procedure is failing. Okay, we have more responsibility than just saying that you please write it off. That's easy, but just imagine the stakeholders from the point of view. Why did it give rise to? That's your responsibility, that you are there. You're the auditor for the last 5 years and you fail to report the, internal control lapses, and now you're saying that you write off. So you cannot really, you are not free from your responsibilities. So you have to take the responsibility of the internal control failure also. So it has to be taken into consideration. Okay, so keep that in mind. Sequence. So process level, please keep in mind sequences of activities happen that happens in a transaction from end to end transaction. Remember, okay. I just gave you another example from process to procure to pay, and this is the way we do. And if you do it this way, you see, this is a practical example I have picked up. If you do it this way and you identify where the risk is there and immediately identify the control, you see the C1, C2 that we are talking about. These are the controls. These are control. It could be a manual control. It could be an automated control. Please remember, all controls are not automated. There is no hard and fast rule. Nowhere it is written that all control has to be automated. Controls are more, the better. The more controls, automated controls, the better for the organization. That's true. But it doesn't mean that if we have some manual controls, it is all, rubbish. No. Manual controls are good enough too. But we should always reduce the manual controls. I know a company where I work as a consultant, the statutory auditor, 31st March report, they said you have too much of manual controls you are having in the payroll. Payroll is a significant account balance in the profit and loss account. And they say that you have too much of manual controls in the payroll. No, we are not going to accept it. It's a listed company. You please do something about it. The client says, okay, overnight they cannot do anything. You please give us time. So they said, they had a bargain and they said, okay, in 6 months' time, we will do it. And I was giving them some consulting, doing some consultancy work there. And we found out, this is the way we found out, So what are the manual controls there? How we can put in an automated controls, because we have to think of the price also. We have to think of the cost of the control also. If the cost is too high, can we not go with the manual controls? We have to weigh that. So the factor which I am trying to tell you, or the point I am trying to make it to you, is that it is not mandatory that you only have automated controls. Automated controls are definitely better than manual controls, but some manual controls are good. Okay. But again, if all controls are manual, then there could be a problem. Okay. So this is the way the flowchart is done. Risks are identified and controls are identified. You see, if this is given and with a plan to the audit staff, I think he or she can do an excellent audit job. That, these are the controls we need to test. So documentation is important. That's what I was trying to prove the point, that why documentation is important. Okay. And then we can do the data analysis. How do we test? We are coming to the test part of it. Data analysis is done many ways. We can download the data, as I'm telling you continuously, that we can take a dump of the GL balances and use Excel to analyze the data, because the data is huge. We cannot manually do it, and no one will give you a printout. And it's no good to take a printout also. What we are going to do? Waste of money. We have to think of the, wastage also. And why should we print? Isn't it? So we will take a soft copy data dump, and we will use it in our tool that we have to analyze the data. It can be as simple as Excel. It could be several other CAT tools that's available in the market. We can, where all we can use. We can use for the risk assessment. Okay, we can do that for our risk assessment. Which are the balances which we know which are of significance, and then we try to download the data, take a dump of the data, and identify that whether this needs to be taken forward in identifying the risk and controls as a risk assessment. Okay, you know the process. You know the process that the purchase order of so and so value has to be approved by so many approver. Okay, so you download the data and make a filter of rupees 1 lakh and above. Okay, out of lakhs of transactions, it may come to few, and then you again filter whether 3 approvers are there or less than 3 approvers are there. So this is the way you are doing the risk assessment. Okay, that whether we take it forward for further, testing and all. If you see that none of the transactions are approved by 3, straight away we have to go for substantive testing, test of detail, that no, their control is weak, there is something wrong with the system. Even though the policy says that purchase order more than 1 lakh of rupees must be approved by 3 approvers, none of them are approved by the 3 approvers. So there is that means that the control has not been implemented in the system. So we have to test the detail. Now then you see that what they have done, they have said that no, we could not do it in the system. What we have done, we have manually approving the on the purchase order. Okay, we are manually approving the purchase order. That's now more work is for us. So again, from there, probably you will see how many such 1 lakh transactions are there and how much will be a good sample. You decide on the sample and ask your, audit staff to actually see each and every purchase order physically, whether it has been signed by the purchase GM or not. We have to be very careful that the purchase GM signature must be known to. We must ensure that that is the signature of the purchase GM. Signature is like some scribbling which we may not identify. So we have to ensure that we identify, yes, this is the general manager's signature. Okay, so that's the control testing. We can use that for the control testing. Non-standard journal entries. Non-standard journal entries. So at the year end, we must, several journal entries are passed for every client. So we will take the year-end journal entries. You download the year-end journal entries and you can review one by one, which are of material figure, and review it. Provisions and things like that. They are important provisions. It could be non-standard, it could be standard. If it is related to a bank, probably it is a standard. But depending upon the journal entry that has been passed. Evaluation of the deficiencies. Then we use the, the quantum. How do we evaluate whether it is deficient in control, there are control weaknesses or not? Then we go by the quantum. That we have a sample of, say, of 10,000 items for checking. And out of the 10,000 items, you saw that 950 are not complying with the parameters for against which you are checking. Then naturally the evaluation will be that there is a significant deficiency, isn't it? So it will be easier to find out that, and we keep on marking pass and fail. It's true and false. It's so easy to do it in Excel. You are all, I'm sure you are all IT savvy. You should be knowing how to operate this Excel, and based on certain formula, if it is not, the true and false can be identified, and then you see how many false cases are there. If they are significant, out of 1,000 cases, 950 are failed cases. Of course, they become significant. Even if materially, value-wise, it is not significant, but control-wise, it's significant, you need to report. So there your judgment comes. We are talking here about the CAT tool for doing the data analysis for evaluation of deficiencies also. Fraud risk assessment, so risk assessment includes the fraud risk assessment also. Immediately you will see the parameter for accepting less than the ordered quantity. Okay, that you can accept 25% less than the purchase order. So this is so immediately it will come to mind. What are such product where such things will happen? it is very difficult. So you probably your understanding could be wrong, that you don't understand. The client will say you didn't understand the business. Okay, I didn't understand the business. Let me understand the business. So once you understand the process, and then also you feel that no, 25% is too high, before talking to the client, you have to satisfy yourself that what you're thinking you can corroborate with facts and figures. So you download such goods receipt from that particular vendor and see how many such cases has happened during the year. It's so easy to do once your understanding and the process is correct. So you download for that vendor all the transactions that has happened during the year, and out of that cases, how many are such cases where the GRN quantity is less by 25% of the purchase order quantity. So maybe out of 1,000 such cases, transactions, you came across 50 cases, 50 situations where the GRN quantity is less by 25%, okay, from the PO quantity. Then you evaluate what is the quantum, and then you also see how much has been paid. Along with that, so CAAT tool helps us in merging more than one. In an Excel, we get data from various dump and merge it. We have to do VLOOKUPs and things like that, and we'll merge against that particular, because the payment will come from one part. The purchase order GRN will come from one part. So creditor's balance, you will get to see how much is credited and how much is debited to that party. But where will you get the quantity? That you have to get from the GRN. So you see at least two files needs to be merged based on the vendor. Okay, so based on that and the period, so you merge that, then you see against those 25 or 50 cases, where in 50 cases it is less, the receipt is less than 25%. Those 50 cases, how much is the invoice value and how much has been paid? Maybe out of those 50 cases, you see in 30 cases, the value has been reduced by the 25% which they have received less. But in other 20 cases, they have been paid in full. Okay, so you now concentrate from 1,000 to 50 to 20. Now you have only 20 cases where they have been paid more but they have received less, right? So they have received less but they have paid more. Now you see the value of that 20 cases vis-a-vis, his actual credit balance, and naturally if it is material, you will decide to qualify or bring it to the notice in the through report, but surely you will have to report it through your audit report as an internal control labs and quantify it. You see, the moment it is being quantified, the auditee doesn't have much thing to say. Okay, so that's very important from your exam point of view also, that what the case study is saying. Are they talking about that we are going to the auditee with the facts and figures? If it is yes, then probably we stand a chance. Even other than your multiple choice questions, you can have the descriptive questions like that also. Keep that in mind. Fraud risk assessment. How the CAAT works, just very quickly. Yes, we have still some time. So very quickly, it is not simple how the CAAT works. It's quite complicated. So that's what I'm saying. So, it is easy to use Excel also, which is also a very good CAAT tool. So we need to understand the business environment very well. I mean, first and foremost, and what we are trying to do, identify the source and format of the data. It's absolutely necessary. That how we are going to get the data. They will say, okay, I'm giving you the data. You cannot make out anything from the data. So we have to tell them very clearly, and time and again, if you go back to the client, they will be very unhappy, and your audit will not be done effectively. So you have to plan and prepare that in this format we want the data, and give that format to the client. We do not know that where from you get, it is there in your, they cannot deny that data is not there. That much you know, that otherwise the creditor's balance cannot be updated. GRN cannot be, stock cannot be updated. So they cannot say that, no, we don't have stored this data. Okay, so they will have the data, but format you have to give. Now it is up to them to give it to you, the data. In most of the cases, it is good that the client, let the client give you the data, because You do not get such access to the system. No one will give you such access to the system, and better not to take such access because we do not know. We do not know the full system. Okay. Once the data is given to us, we need to verify the accuracy and the completeness of the data. Completeness is very important. They might remove some, data. How will you be able to find it out? Based on the sequence number. Do you understand, my dear students, why sequence number is important? The 20 cases that we finally identified, that these are the 20 cases where, they paid more than what they received. Those 20 cases they removed. And how will you identify? Unless and until you have the GRN sequence number. The moment you have, so when you are giving the format, don't forget to mention that the GRN number should also be given. Okay, GRN number also should be given. And how do you know that? Because same person may not have that continuous sequence of the GRN number. You also tell them to give a complete numbering sequence wise, the GRN number for that period. Because these particular vendor have only 1,000 transactions. So 1,000 GRN maximum probably, or say if it is come in more than one tranche, it will be more. So for our argument's sake, that say at least 1,000 GRN will be there. So some GRN has happened in April, some has happened in May, some in July. So sequence number will be completely different. So how will you know that they have not removed data? So along with the data for the vendor, you also ask from the client that you please give us a list of the GRN for the entire year for this particular product, which probably this vendor is dealing in, or irrespective of the product, if the sequencing is irrespective of the product. The sequence can be a running number, whether it is a petroleum product or whether it is any coal or any other material or whether it's a stationery. It could be just a running serial number. So you need to know understanding. First one, the understanding of the business is very important and how the IT works. Alright. So system. So if you know that it is a continuous running system, you tell them, just give me the sequence number, give me a dump of the, GRN number. Just give me a dump of the GRN number that has happened from April to 31st March, and then you can cross check if something is missing. If something is missing from there. With the, you can say GRN number and the vendor name. That's all. All you need is the GRN number and the vendor name. You can cross check with the data which they have give you separately for the vendor. And you will be able to identify if they have removed any data, because at the end of the day, you have to remember they are giving you in a text file, Excel file. So it is so easy to remove data, isn't it? So the data on which you are working on, if that data is faulty, so you are working on a wrong data. That much you have to remember as an auditor. It's very, very important that on what data we are working. Okay, that itself is correct and we are attesting dangerous. And later on, we cannot go and say that, no, we were not aware. We are supposed to be aware. Then we apply criteria for on the data obtained. We apply that we want to see, in this case, in particular, this case study, if I can talk about, that we are applying the criteria that please show me those cases where payment is 100%, but the GRN quantity is less than the pure quantity. Okay? And then report and document result as per, and give a conclusion as per the auditing standards and whatever reports and things like that. Please remember this. Okay. Some guidelines to remember. All may not be applicable, but several of them are applicable. And they are, of course, auditing standards, Companies Act, Section 143 of the Companies Act 2013, which tells us to give a separate report on internal controls. So we cannot just blindly give a report when we do not have no idea about the internal control system. Okay. So without examination, we are giving a report. So that's a misconduct on our part. So remember that in mind. SOX, Sarbanes-Oxley Act, which happened in 2002, fallout of Enron. That can be applicable if a subsidiary or an office of a company listed in US that's working here. SOX could be applicable. So we need to be careful about that. ISO, ISMS gives you lots of guidelines, information system, management system. It gives us a lot of information about what to do in IT environment, about relating to information. We can always read that and keep that in mind. PCI DSS is related to the credit cards, the cards, the card systems in our country. There are a whole lot of things. One small example I'll give you, which is PSPCI DSS data is not this guideline is not Indian guideline. This is a foreign guideline. Now the thing is that why it is related to us. You might say why we need to. We have to remember so many things. Again, you are saying that we need to remember the foreign guidelines also. Why? Because very much applicable. A small example. You have a credit card given by a Indian PSU bank only. It doesn't have to be a foreign bank. It is by a PSU bank. The PSI DSS data says that when you are using the credit card, the database should not store the credit card number in plain text. It should not store the data in plain text. Those who are using credit card, you will get the statement. If you get to see, the numbers are masked with XXXX. Only the last 4 digits are shown. This is for the guidelines, following the guidelines given out by PCI DSS, framework, the guidelines that you cannot store data. So as an auditor, it is important for us to review that also. You just ask them a question and they immediately, they say that I am not sure. You please make sure and tell us. And probably if you feel that what they are saying is not correct, it is always take a jump of in a retail industry. If you are doing an audit, it is good to take a dump of the customers transactions where that is stored. Or they might say, no, we will not give you such data. It is confidential. It cannot be it is of course confidential, but the moment it is not stored in plain text, you don't get to see. Or you just might tell them that you don't have to share with me, but at least you show me on screen. I have to go through it. So those kind of things, but they cannot deny the data to you also if you want. SSAE 16, it is given by the AICP USA, and we follow that for the service organizations. As I was telling you about the SOC 2 reports, the COBIT given out again. These are all international guidelines, the cyber security framework. So we need to be, we must have working knowledge about this. What I'm saying that you must have working knowledge about this when we do an audit, so that we do it effectively and efficiently. For your exam purpose, probably you have to remember this a little bit. May not be in detail. Okay, so that will be all. I'm on time. I will take you through some case studies. I'll take you through some case studies. Okay, so just a minute. XYZ Company Limited uses SAP ERP for their business processes for several years. However, a new attendance recording system has been implemented which is not integrated with the HR package and hence requires manual intervention. But work for the integration is in progress. So they are trying to integrate that attendance recording system with the HR package in SAP. The auditor wants to carry out substantive testing for payroll balances which the client is not happy about, and feels that since all processes are automated, because HR is automated. Please remember what we are saying, that the payroll is automated. Only thing is that the attendance recording system is new and it is not yet integrated with the HR package. So they are manually, what do we mean by integrated here? For your exam purpose, they are manually passing on the attendance data to the HR package based on which the payroll is getting processed. So the auditor says that no, there is a risk and hence they want to carry out a substantive test for the payroll balances which the client is not happy about, and feels that since all the procedures are automated, substantive testing is a waste of time. What the auditor should do? Listen to the client, carry out substantive testing for the payroll package, carry out test of controls for payroll package also, carry out substantive testing for all processes. I need an answer. I need an answer. Yes, please. Answer me this. I'm waiting. Yes, please, somebody. Anyone there? Yes, please. Answer me this. Answer me this. Yes, please. 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 Answer me this. Yes, Anyone there? No answer? They should carry out the substantive testing for the payroll. Okay, because it is not integrated, and as I told you during this lecture, that it's a substantial balance, and for us to attest and audit. So attendance is the basis. Attendance form basis for the payroll processing. So if the attendance, there is some risk, there is some risk of not having control in the attendance recording system, it would be good to check at least the, that part of it in detail, that the attendance is coming and captured in the payroll package correctly, okay, before the payroll is processed. Okay, payroll C, payroll package, test of control, but this control is not there. Aniruddha, there is not much of control there in the payroll package. So for the, maybe, actually, I'm wrong. Actually, I'm just not wrong. I just see, Aniruddha, if your answer gets changed. It's not the package, it should be the payroll data. Aniruddha, you are also right, because Aniruddha, yeah. Your answer is also right, because you say package, the test of what control the package has. Now, if you just see that the data I have changed in B, option B, can B be the right answer? B is the right answer, because we need to carry out substantive testing of the payroll data. Okay, payroll data we need to review in detail, because adequate controls are not there. Okay, I'm sorry, Aniruddha, because probably you got it. You answered C because you saw the payroll package. It should be actually D. I'm sorry, actually it should be the payroll data. My apologies. The next case study. XYZ, a company limited, uses SAP ERP for their business process, and just a minute, I can't read this. And their entire infrastructure is deployed in a third-party data center. The auditor wants access to the to audit the data center as well, to get a comfort on the IT controls. Client is not allowing such access. The data center is ISO certified. What the auditor should do? Yeah, thank you. Thank you, Aniruddha. So here, we are saying that they are using SAP and it is deployed. The infrastructure is in a data center which is owned by a third party. It is not owned by the XYZ company. Okay. Now, as an auditor, to understand the whether the controls are there against the risks from the general IT control, from the general IT infrastructure point of view, the auditor wants to go and do some review in the data center, but he is not being allowed. So, and they also informed that the data center is ISO certified. So, what the auditor, as an auditor, what should be done? Do not conduct a review of IT general controls in the data center. Get a management representation that IT general controls are working effectively and effectively in the data center. Check the ISO certificate and do nothing else. Ask for a ISAE SOC report. Tell me. You can take one by one. Do you think in your mind that we will not do anything because the client is not allowing us? Is it correct? I don't think any of you will agree to that. We will not go by what client is asking. How to do the audit, we know. We are independent. We know how to do the audit. So if it is required by the guidelines, we have to follow it. For our understanding purpose, we need to follow it, because tomorrow if there is a misstatement, because we didn't check this, they will not stand by you. All right? Not expected also. So we cannot do that. And just taking a management, the option B, just taking a management representation is not good enough. Just not good enough. So we cannot, as an auditor, be happy that that management has given me a representation, and it's signed by CFO, CIO, CEO, that yes, we have all general controls working. No, we are independent. We have to make our own opinion. It cannot be based on some written representation that yes, everything is working fine. B is also not possible. Please try to answer. Then A and B is not there. Then what? out of C and D. And always the multiple choice questions, there is always a thin line difference, I'm sure you know by now, by practicing, that two options, it is always easy to remove two options, but you generally get stuck in the other two options. And there is always a thin line difference between the two options. This can be correct, that can be also correct. So there your knowledge, the clarity of your knowledge comes. So which one? Check the ISO certificate and do nothing else, or ask for an ICAI SOC report? Which one is more heavyweight? You know this. Yes, please. C or D? I need an answer. I think D is the right answer. Okay? And always when somebody may be thinking of this question, what happens if they do not have this? When you answer for your exam purpose, when you answer the question, only stick to the case study. Do not think what would have happened if had it been so. No one is asking you that. So under these circumstances, it is good to ask for a ICAI SOC report. If they do not have what would have happened, those are different issues. Nowhere the case study is talking about that. Please restrict yourself to the content of the case study. This is a tip for your exam purpose. Whenever when you are going for the MCQ is there. So MCQ, you only restrict yourself to the content of that case study. You have to be very, very careful and don't think beyond the case study, and then come back to the options, think in terms of the case study, and then answer. So here in this case, A and B is straight away ruled out, and between the two options of check ISO certificate and do nothing else, I added that, and do nothing else. I didn't confuse you. Okay? It's very clearly saying check the ISO certificate and do nothing. No. Ask for a ICAI SOC report. We can ask for a ICAI SOC report. Okay? ISO certificate, you can now, what is the difference between the ISO certificate and ICAI SOC report? ISO certificate they have, but you do not exactly know whether it is running as expected. The ISO certificate you are not renewing probably every year. You have to see when was it taken last. That you need to see. Okay, and so it is not a sacrosanct that it is, if they are having an ISO certificate, they are following everything. But ICAI SOC report is always, it is very up to date. It is not, if it is older than 1 year, it is of no use. So you can, and it gives you in more detail. It gives you, and it is specific to the service organization. It is specific to the service organization, and hence under this context, ICAI SOC report is more applicable than the other. Okay, so that's all as far as spatial audit aspects in an automated environment is concerned. If you have any question, I am willing to take it. You can post it if you, as if probably it is related to IT and you are not very comfortable from first question that I came across. I would request you, I have some more classes, so I would request you go back today after taking some rest or attending other classes. Please go through the study material. It is not very thick. It is few pages only. Please go through the study material, or and if you have question, post it here. In the next class, I will definitely answer that. Whatever number of the questions that you get with whatever weightage, there is no reason why you should not get it correct. Aniruddha, you are right. D is the right answer. Very good. Thank you. Any question? Or I know there is time difference. That's IT. I mean, we can't be that online, and there is a atmospheric disturbances also. In my hometown, it's raining, so it could be because of that also. We have to take into consideration those kind of things which we discussed, right? So that will be all. If you have any question, please post it. I'll be very happy to answer. I'll have some more classes. So from Code of Ethics or from special audit aspect in automated environment, from any of these things. If you ask any question, please you may post it. Okay? Anything else? I'm done for the class, for this chapter. Since we have still some time, you can ask me questions.
I think, ma'am, time is over, so we need to wind up.
No problem. No problem. I was waiting from you to waiting for you to tell me the time is over. So no problem. In that case, we will wind it up, my dear students. Thank you very much for your patience hearing. If you have questions, I'm sure you will have some questions. You go back. You may not impromptu have questions. You have to go back to your case study materials. I'm sure you have some questions. Please post questions. I'll be very happy to answer you. Thank you. Okay. Have a good day, everybody.